AIFC is an annual series of events that brings together a wide spectrum of stakeholders to discuss various keys of Islamic finance, economic, and development issues. In 2022, the 6th AIFC is held within the same year as Indonesia's G20 presidency. This year's conference bears a very important theme: Islamic finance role in MSMEs empowerment, boosting capability and fostering inclusiveness for sustainable future. Recover together, recover stronger.
In the name of Allah, the most gracious and the most merciful. Ministry of Finance Indonesia presents. In 2022, the global risks have shifted from COVID-19 pandemic to global economic pressure. High inflation escalated by geopolitical conflicts between Russia and Ukraine has caused commodity price surging. Tightening monetary policy on global financial markets caused by high inflation has driven capital outflows from emerging markets. In the middle of these uncertainties, Islamic economy is proven to be resilient and still growing. Islamic finance assets grew 7.8% year-on-year in 2021 and are expected to grow by 8.0% in 2022. Investments in the Islamic economic sector across OIC and select non-OIC markets grew by 118% in 2020-2021 compared to 2019 and 2020. In line with this global trend, Islamic finance in Indonesia also grew positively in 2021 based on the State of the Global Islamic Economy Report 2021. Indonesia is among the top 4 countries that has significant development of the Islamic economy in the world. Meanwhile, Indonesia's halal food industry is listed as the second largest in the world. The main pillar of the Islamic economy is real sectors and the principle of Islamic finance, which are in line with the spirit of MSMEs, value inclusive, free scams, innovative transactions. In Indonesia, MSMEs accounted for 97% national workforce, 60% investment, cover around 99% of business, playing a key role in economic growth and sustainability. However, MSMEs are facing a lot of challenges. One of them are financing access. Bank Indonesia survey show that 77.95% of MSMEs were negatively affected by the COVID-19 pandemic in 2021. The main problems are declining revenues and increasing operational costs. Islamic finance brings solution to this dilemma by Islamic Integrated Financing Framework for MSME Ecosystem Improvement, linkage program among banks, fintech, financial institutions, and insurance to support MSMEs. Therefore, Ministry of Finance Indonesia proudly presents the 6th AIFC, focusing on Islamic finance role in MSMEs empowerment, boosting capacity, and fostering inclusiveness for sustainable future. Recover together, recover stronger.
Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, and good evening to you. Welcome to the second day of the 6th Annual Islamic Finance Conference, Islamic Finance Role in MSMEs Empowerment, Boosting Capability and Fostering Inclusiveness for a Sustainable Future.
Our honorable guest, His and Her Excellency, Ambassador of ISDB member, OIC member, ASEAN member, and G20 member countries to Indonesia in Jakarta.
Head of Mission of International Organizations in Indonesia,
Assistant to the Indonesia's Finance Minister for Financial Services and Capital Market, Mr. Suminto.
Southeast Asia Lead, Better Than Cash Alliance, Ms. Isfarisi Valingam.
Director of the Board, Senior Partner Innovation Strategy, Government and Financial Services, Dinar Standard, Mr. Said Farouk.
Lead Economic Empowerment Program Specialist, ISDB, Mr. Syed Hasan Al-Shagov.
Co-founder and Group Managing Director of Etis Group, Mr. Umar Munshi.
Deputy Director, Islamic Economy Supporting Ecosystem, Indonesia's National Committee for Islamic Economy and Finance, Mr. Ginanjar Dewandaru.
Senior Advisor for PE Finance and Funds, UNDP Financial Sector Hub, Mr. Artak Robert Melkonyan.
Regional Research Lead, Southeast Asia, Women's World Banking, Ms. Agnes Salyanti.
CEO of Alami Group, Mr. Dimanjani.
Technical Analyst, Innovative and Sustainable Finance of UNDP, Mr. Greget Kalabuana.
As well as Bogor Agriculture University representative, Dr. Irfan Shauki Beg.
And of course, greetings to all participants of this conference that have been attending virtually today through Zoom and YouTube channel of the Ministry of Finance of the Republic of Indonesia and BKF Kemenq.
Peace, God's mercy, and blessings be upon you. We hope everyone is still in good condition and stay safe, even though we have to meet virtually. My name is Fatima Medina.
And I am Risminda Anindita.
It is our honor to welcome you to the official side event of the G20 Indonesia Presidency 2022 with the theme, Recover Together, Recover Stronger. Today is the final day of the 6th IAFC. We thank you for returning after yesterday's session, which included a panel discussion on MSMEs empowerment, concept, challenge, and strategy, presentations from the top 20 IFC papers, and a guest lecture by Dr. Sami Al-Suwailam.
However, today's agenda will be just as exciting as yesterday's. Not only will we be discussing several interesting topics, but we will also be announcing the call for papers winners today. And there are 5 segments to today's conference with 2 intriguing panel discussions scheduled for the day.
Okay, first, we will learn about economic empowerment in the digital era, boosting MSME capabilities through digital platform from our guest lecturer, Ms. Isfarisi Valingam. Following that, a call for paper announcement will commence.
And third, a deep dive into Islamic finance insights in empowering MSMEs through digitalization of Islamic financing and the use of technology in boosting MSMEs' assets and capabilities will take place. The conference will then take a short break for lunch and Zuhur prayer, followed by a talk show on Islamic finance role, improving youth and women participation in MSMEs development.
And eventually, we will wrap up this conference with closing remarks from Bapak Suminto, Assistant to the Minister of Finance of the Republic of Indonesia for Financial Services and Capital Market Policy and Regulation.
Ladies and gentlemen, I have the honor of introducing our guest lecturer for today. She is Southeast Asia Lead at the Better Than Cash Alliance, the United Nations-based partnership of governments, companies, and international organizations that accelerates the transition from cash to digital payments to reduce poverty and drive inclusive growth. She will be speaking today on the topic of economic empowerment in the digital era, strengthening MSME capabilities through digital platform.
Please join me to welcome Ms. Isfari Sibalingam.
Thank you very much. Selamat pagi, Bapak dan Ibu. Assalamualaikum. A very good morning to all distinguished guests, speakers, and colleagues. If we could just project the slides, that would be helpful. Thank you. Great, and we can move on to the next slide. I would like to start by thanking the organizers at the Ministry of Finance, Assistant to Minister Pak Suminto, the team at the Fiscal Policy Office, Pak Febrio, Pak Adi, and the rest of the very exceptional team for the kind invitation to share global lessons on the responsible acceleration of digital payments from cash to reduce poverty and to drive inclusive digital growth, especially for MSMEs. As mentioned earlier, our members include global governments, including, of course, the government of Indonesia, many large corporates, as well as fellow international organizations. And it's indeed a privilege to share some of these important lessons today. Can move on to the next slide. As several speakers have highlighted yesterday, MSMEs are the backbone of emerging market economies, and in that way also the global economy. They contribute close to 40% of overall employment and are also of crucial importance to achieving the 17 Sustainable Development Goals, particularly SDGs 1, 8, and 10. And as we are in the last decade towards 2030, it is really an important period of time for us to start thinking about how we can accelerate the development towards the SDGs. The reality today is that many MSMEs are still underserved in their access to digital payments and more broadly digital financial services. This is of course critical for their participation in today's increasingly digitized digital economy. In 2020, the World Bank found that person-to-business payments to micro, small, and medium enterprises worldwide amounted to US 18.8 trillion. However, only 37% are made electronically. So there is a huge gap that we all need to fill, because digitization actually offers a pathway for MSMEs to build credit histories, access formal financial services, formalize their businesses, and ultimately increase their incomes and profits. This year, the Indonesian G20 presidency, especially through the leadership of the Global Partnership for Financial Inclusion, the GPFI, has placed a very clear focus on MSMEs, women, and youth. At the Better Than Cash Alliance, we fully agree and support the Indonesian presidency and are working towards this goal, especially because it's essential for COVID recovery. The time is also now to focus on building trust and mitigating risks in digital payments and financial services as we build more inclusive economies to recover stronger and recover together and recover stronger. Later this year, under the leadership of the Indonesian presidency, the GPFI will also provide and produce a practical resource guide for implementers with a focus on key segments such as MSMEs, women and youth, which will be made a public resource for all. We can move on to the next slide. So we've talked about, the importance of acting now, especially in the face of COVID. And last year, in response to also the rapid digitization, globally, that has been fueled by the pandemic, and responding to the UN Secretary General's roadmap for digital cooperation, the UN Principles for Responsible Digital Payments were launched to provide actionable insights for governments, companies, and international organizations to drive responsible digital payments, which build trust and equity for all. These were developed with and for Alliance members, and the principles build on consumer protection practices with a focus on protecting low-income consumers, including MSMEs. The first 4 principles actually focus on the protection of funds, number 2, safeguarding of data, number 4, transparency on pricing, number 6, and recourse, number 8. So as said, these are all foundational consumer protection principles that all regulators care about. And having and recognizing the pandemic's economic wreckage, especially having a negative and long-lasting impact on women and girls, and in line with the Reaching Financial Equality that was launched by Honorable Finance Minister Ibu Sri Mulyani, we have also included a new principle on prioritizing women, which is number 3. The other 5 principles are focused on ensuring that digital payments and digital financial services are actually inclusive. And this refers to principle number 5, which ensures that products are designed for user needs. Number 7, to provide choice through interoperability, as well as number 9, accountability, and number 1, treating everyone fairly. I would like to also recognize here that the UN Principles for Responsible Digital Payments are aligned with the spirit of the core principles of Islamic finance, namely fairness and transparency. We can move on to the next slide, please. Through our initiatives with governments and companies, we have learnt many lessons to drive adoption of digital payments by MSMEs. It is important to note that digital payment solutions vary across geographies, and as innovation is a constant in this sector, digital payment options also change quickly for all actors in the value chain, including MSMEs. There is no silver bullet, but we can learn many things from these experiences from our members. The first one is really that government implementations of digital technologies as public goods and shared infrastructure is particularly important for driving costs down. Increasing access to digital payments at the last mile and enabling inclusion of vulnerable populations, especially women. And one great example of this are QR codes, which are gaining traction across ASEAN, including Indonesia. I'll speak more about that later, but also in Africa, in Ghana, Rwanda, as well as in Latin America and the Caribbean. The second is that we have seen across our initiatives, incentives that bring value for MSMEs play a very catalytic role in nudging customers to habitual usage. So it is important to develop and implement flexible incentive frameworks to drive adoption. Number 3, we have also identified 2 factors, particularly from our work in Mexico and the Philippines, that help merchants first formalize and then digitized. So these 2 factors are basically, providing access to credit in whatever initiative that are directed towards small merchants in particular. And the second one is also providing tax incentives for formalization. What we found in Mexico, for example, is that larger businesses encourage the small providers to use e-invoices, which helped to bring an estimated 4.2 million micro-enterprises to the formal economy. This is quite significant. Merchants who adopted digital payments basically recorded a 54% increase, adding $640 on average to their monthly sales revenue. And for the smallest merchants, this is a significant increase to their monthly revenues. Number 4, in Ghana, our payment landscape survey identified barriers amongst merchants for electronic payment acceptance. And what that showed us is that it's really important to build merchant trust in digital platforms, especially when they are new users in digital platforms. And this is a continuous process, so we must be patient. From this work in Ghana, 24% of respondents experienced some form of digital payment fraud. 42% of respondents indicated that they would not be swayed by incentives because of slow, failed, or timed out transactions and concerns about fraud. So what this really tells us is that the MSME customer experience on digital platforms is really important and is critical for actually building trust in continued use of digital payments, but also more broadly, digital financial services. With that, I would like to come to the next slide, please, and to discuss specific international good practices also from the Alliance, which focus on some of the key principles that I spoke about today. And I'm focusing on 4 specific principles that we think are most impactful for MSMEs. The first one is prioritize women. Businesses are predominantly owned and run by women, especially when they're micro and small enterprises. According to the IFC, half of all small enterprises globally and a third of medium-sized enterprises, well, half of small enterprises and a third of medium-sized enterprises are run by women in Indonesia. And globally, this figure is closer to 40% for MSMEs. So that's a significant contribution that women have. I'm speaking today about an example from Ethiopia, where our member, the government of Indonesia, Ethiopia has actually boldly committed to reducing the gender gap by 50% in 5 years. And this is reflected in 2 recently launched strategies that have committed to the key goals as part of broader gender intentionality. The first is collection of gender disaggregated data. The second is to address very intentionally women's lack of IDs and access to mobiles and connectivity. The third is to advocate for a need for gender lens in DFS product design by providers. So these are all clearly identified and also stated at a national strategic level, which is quite important. And this also gives confidence to the private sector in the country. So what has also happened in parallel is that Unilever, which you would all recognize as a global FMCG brand, and a local partner called Kedami Mart are actually working to digitize payments to improve collection and scale growth of the Shakti program, which is focused specifically on women-run MSMEs in country. So basically, the government's commitment to building infrastructure and also prioritizing women MSMEs gives confidence and motivates what is required private sector action also to attain the goals. Move to the next slide. And this one is on safeguarding client data. And it is a very important aspect, particularly for MSMEs. And I speak today about an initiative by the government of India, which is the Account Aggregator Network. This is a financial data sharing system that has the potential to revolutionize investing and credit, and to give millions of consumers greater access and control over their financial records, which otherwise, remains in their hands and in silos and cannot be accessed by the wider financial services supply side. This is really the first step towards open banking in India and empowers millions of customers to digitally access and share their financial data across institutions in a secure and efficient manner. We all know about the credit gap that exists for MSMEs, and basically this is going to be particularly impactful for the most micro segment of enterprises. So What it is a central bank regulated entity. The account aggregator is a central bank regulated entity that helps an individual securely and digitally access and share information from one financial institution where they have an account to other regulated financial institutions in the account aggregator network. The principles are that data cannot be shared without individuals' consent. It enables consumers to selectively share and to revoke data once it's shared. It's completely voluntary for individuals to register. And the account aggregator is an interoperable data blind consent manager. So account aggregators can't actually read this consumer data and they cannot resell this consumer data. So this is really what we view as important tenets of data protection and privacy, and is really critical also for first-time users, less experienced users to build trust in digital platforms. So with that, I would like to go on to the next example. And here I'm very pleased to be, also showcasing an example which is from Indonesia, and it shows also the government and the central bank's leadership in creating and committing and really investing in national payments infrastructure that allows all digital payments to be facilitated by a single standardized QR code. Chris, which I'm sure many in the audience know and use a lot, has significantly contributed to creating an interoperable and affordable digital payment ecosystem in Indonesia. And this point on affordable is exceptionally important because we need to make the cost of acceptance, particularly for micro enterprises, affordable. Many micro enterprises are operating on a low margin, high volume business model and are extremely cost sensitive. So for digital payments and for digital financial services to be equitable, cost needs to be lowered. As of 2020, BI has reported that approximately 16 million merchants have been onboarded and have adopted Chris, which is a significant number. And through increased acceptance and use of digital payments enabled by this channel, MSMEs will be able to generate this digital transaction record that can help open new avenues for credit. And the last principle I'd like to focus on today is number 9, challenge value chain accountability. And to use an example from Mexico, where Grupo Bimbo, which is one of the biggest corner store suppliers. So basically it's a supplier to warungs in Mexico, and their technology partner formed a joint venture called Red Quibo, which has helped 80,000 merchants stay competitive by offering digital services such as mobile airtime, bill payments. So mobile airtimes, bill payments are an example of how you create a value proposition for these small MSMEs beyond payments. And by also incorporating additional incentives like using this digital platform to offer additional products to their customers, using this platform to access formal working capital through a microfinance institution. The small merchants that were part of Grupo Bimbo's network were able to expand their customer base by catering to those looking to pay digitally. And as you can see from these numbers on the slide, the results were quite significant for these merchants. There was a 20 to 30% increase in revenue for participating merchants. And a total of $24 million was extended to to the 80,000 participating merchants. So, I think this is a great example to also wrap up my time today, to say that responsibility is really something that must be seen as a shared construct. And that is really what we're trying to advocate through the UN Principles for Responsible Digital Payments. The power is really with us all. I know that there are many actors in the audience today, financial service providers, academics, government, regulators, And we all have a role in creating this responsible digital payments ecosystem. And we hope that, the UN Principles for Responsible Digital Payments, as well as the resources that have been produced by the Global Partnership for Financial Inclusion, will offer you good practices and be a good guide on this digitization journey. With that, I thank you for your attention.
Yeah, thank you, Ms. 𝙔𝙤𝙪𝙣𝙣𝙣, for your time. Ladies and gentlemen, let us move to one of the most awaited agenda, which is the announcement of call for paper winner.
I would like to invite Dr. Irfan Shauki Beg from the Faculty of Economics and Business of Bogor Agricultural University. Dr. Irfan is also a member of Board of Commissioner of the Indonesia Wakaf Board and Sharia Economic Community.
Dr. Irfan, you may have the floor.
Thank you very much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and a very good morning. Peace be upon you all. His and Her Excellencies, the ambassadors of the UN, OIC, and ISDB members in Jakarta, the Honorable Dr. Suminto, Assistant to the Minister for Financial Services and Capital Market Policy and Regulation, Minister of Finance, the Honorable Dr. Ginanjar Dewandaru, Deputy Director at the National Committee for Islamic Economy and Finance, the Honorable Mr. 𝙍𝙚𝙣𝙾𝙧𝙘𝙝, Technical Analyst Innovative and Sustainable Finance, UNDP, the Honorable Isfari Sivalingam, Southeast Asia Lead, Better Than Cash Alliance, our guest lecturer for today's session, the Honorable all panelists for today's discussion, Mr. Rafiuddin Siko, Syed Hasan Al-Saghof, Umar Munshi, Arta Robert Nalkoyan, Agnes Salyanti, and Dima Jani. And I wish you all a delightful and meaningful sharing and discussion today. So actually, the 6th Annual Islamic Finance Conference, or AIFC 2022, consists of two main activities. In addition to the conference, AIFC also held a call for paper competition. And I, Irfan Shauki Beg, am here in front of all of you to announce the winners of the call for paper competition, which the final selection process was held yesterday on Wednesday, August 24, 2022. The paper selection process of the 6th Annual Islamic Finance Conference 2022 began with the opening of registration and submission of abstracts from April 14 to May 20th this year. As a result, 142 teams registered and submitted their abstracts within that period, consisting of 104 in general category and 38 in the young researcher category. Of 104 general categories, 94 came from Indonesia and 10 from other countries, comprising 6 from Malaysia, 1 from Turkey, 1 from Singapore, 1 from Australia, and 1 from the United States of America. Meanwhile, the young researcher category consisted of 36 teams from Indonesia and 2 from other countries. 1 was from Malaysia and 1 from Poland. 43 reviewers of the jury team reviewed these 142 submitted abstracts. The 43 reviewers came from various leading universities in Indonesia who have expertise under the theme of the 6th Annual Islamic Finance Conference 2022. In addition, to promote objectivity and avoid biases, 2 reviewers blindly review each manuscript. The abstract review process lasted from May 23rd until June 13, 2022. The result of the top 40 abstracts was announced on June 15, 2022, And the top 40 abstracts consisted of 30 themes from general category, of which 27 were from Indonesia, 3 were from abroad, 1 from Malaysia, 1 from Singapore, and 1 from Turkey. Meanwhile, the rest 10 themes of the top 40 abstracts were selected from the young researcher category, 9 themes from Indonesia and 1 from Poland. The selected 40 themes must submit their paper's full version on July 1st, 2022. Until the 1st of July 2022, 37 teams have submitted their full papers. The 37 full papers were reselected for the top 20 papers, and the 37 full papers were distributed to 17 domestic reviewers from Indonesia and 9 international reviewers. 2 reviewers review each paper according to each reviewer's expertise based on the paper's topic. The paper review process started on July 11 until August 8, 2022. The final result of the top 20 papers was announced on Tuesday, August 9, 2022. The top 20 papers then presented their paper in the final round on August 24, 2022, which was yesterday. As a result, they will be selected into the top 10 best papers. 15 discussants have evaluated and provided their feedback and score to select the top 10 best papers. The 15 discussants comprise 5 international experts and 10 experts from Indonesia. I assure you that the assessment has been carried out objectively. Today, August 25th, 2022, the top 10 best papers will be announced, and here are the results. Let me begin with the Young Researcher category. The third place for the best paper in the Young Researcher category is secured by Pembicara Asana Nadia, Asad Muhammad Iqbal Irfani from IPB University. The paper title, The Priority of Marketing Mix Strategy in Wakaf's IPB online fundraising platform using IPA methods, with a total score of 72.5. Congratulations and barakallah. Now let's move on the second place, the runner-up of the best paper from the Young Researcher category, which is won by and Slamet Rusydiana from Tasga Institute and Smart Indonesia, with the title of the paper, Efficiency of Rural Banks and Islamic Rural Banks in Indonesia, Data Envelopment Analysis, with a total score of 73.9. Congratulations to Evania, barakallah. And here is the most awaited announcement, the first paper, the champion, the best paper in the Young Researcher category. It is won by Silma, Lafifa, Sunarya, and I'm Rusydiana from Khaldun University and Smart Indonesia. And the paper's title is a qualitative review on Islamic sustainable finance with a total score of 74.6. Congratulations to Sister Silma, barakallah. And now, let's move to the winner of the general category. There are 7 slots for the best paper for the general category due to the number of papers submitted, which was more than the Young Researcher category. There will be 4 consolation prize and the top 3 papers under this category. The 4 consolation prize winners of the best paper in the general category were secured by Kuliatul Mutmainnah sudah berapa di Gordi Rusydiana from Universitas Siliwangi and Islam Halijaga Jakarta, and then Bimo Aji Dimas Danindro Yogi Purjayanto from Indonesia Statistic Agency or BPS, and then we have Nadia Putri Denisha Deti Nur Fadila from Sekolah Tinggi Manajemen IPMI, and the last winner of the consolation prize we have Muhammad Rizky Rizaldi and Izani Ulfi from Gunadarma University. Congratulations to all of you and Barakallah. And finally, I will announce the winners of the top 3 best papers of the general category. The third place of the best paper from general category is secured by Denny Lubis, Ahmad Rodoni, and Ais Amalia from IPB University and UIN Syarif Hidayatullah Jakarta in the title of Food Waste Behavior in Muslim Household Consumption in Indonesia with a total score of 85.0. Congratulations to Dr. Denny Lubis, Barakallah. And next, the second place, the runner-up of the best paper from general category is won by Fatanza Wiratama, Zasya Safitri from BPS Statistic of Barito Kuala Regency and BPS Statistic of Mohon City with the title Is Islamic Economy as That Green and a total score of 86.0. Congratulations to Budi Fatanza Wiratama. And here is the most awaited announcement. The winner, the first place of the best paper in the general category is won by Muhammad Iqbal Irfani, Qoriatul Hasanah Slamet Rusydiana from IPB University and Smart Indonesia with the title of the paper Proposing Green Wakaf Development Strategy in Protecting Land Ecosystem in Indonesia, an Interpretive Structural Modeling Approach with a total score of 89.0. MashaAllah, congratulations. Congratulations to all winners and to all presenters. Barakallahu fi ilmikum. May Allah subhanahu wa ta'ala always help all of you to be productive researchers to continue spreading the ideas of Islamic economy and finance worldwide. That's all from me. Thank you very much. Back to MC. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Irfan Shauki. But to commemorate this occasion, we'd like to invite again Dr. Irfan Shauki Beg and also Ibu Yani Farida from the Ministry of Finance and all of the category winners to turn on their cameras and take a group photo. Please join us for the first group photos. The 3 winners in the Young Researchers category. Here.
Yeah.
On the count of 3. Okay, all right. On the count of 3, 3, 2, 1. All right.
Yeah, thank you very much. Next in line from the general category consolation prize winners. Please join us for the second group photos, the 7th to the 4th winner.
For the 7th to the 4th winner, yeah?
Yes, the 7th champion, the 6th champion, the 5th champion, and also the 4th champion from the general category. Yeah, here we are. On the count of 3. 3, 2, 1. Yeah, thank you very much.
Thank you very much. And last but not least, here are the first, second, and the third winner from the general category. Please turn on your cameras as well for our group photos. The first, second, and the third winner for the general category. Please turn on your camera as well for our group photos. Yes? All right, on the count of 3. 3, 2, 1. All right, thank you very much.
Thank you, Dr. Irfan Shauki Baik and Ibu Yani Farida for your time and hard work along with all the judges for the call for paper competition. Thank you to everyone who took part in the 6 AIFC call for papers, and once again, congratulations to all the winners. We hope that all the suggestions and ideas will contribute to better policy formulation for Islamic finance and economics.
Yeah, ladies and gentlemen, we will continue to the conference with panel discussion, carrying the topic of Islamic finance role, improving MSMEs' assets and capabilities through digitalization and technology with the experts. We invite you to join the discussion as well by submitting your comments, thoughts, and this question in the link fiscal.id/6th IFC 2022, which the panelists will then address during the Q&A session. Please also state your name, your institution, and to whom the question is addressed to, followed by your question.
This session will be moderated by Dr. Ginanjar Dewandaru. He currently serves as the Deputy Director, Islamic Economy Supporting Ecosystem at Indonesia National Committee for Islamic Economy and Finance, or KNEKS. Before joining KNEKS, he was at the General Council of Islamic Banks and Financial Institutions in Bahrain, coordinating regulatory advocacy and best practices implementation across Islamic banks globally. He was also part of INC EIF BNM World Bank Task Force in developing value-based intermediation in Malaysia. He holds a master's degree from University of Melbourne and PhD from INC EIF. He published papers on Islamic finance and sustainability in several top-tier international journals.
And our panelists are, the first one is Director of the Board, Senior Partner Innovation Strategy, Government and Financial Services, Dinar Standard, Mr. Said Farouk. Following with Lead Economic Empowerment Program Specialist ISDB, Mr. Syed Hassan Al-Sagaf, and co-founder and group managing director of Etis Group, Mr. Umar Munshi.
But before the session begins, we would like to invite all the panelists and the discussion chair up to the virtual stage to take a picture together. Please welcome Dr. Ginanjar Dewandaru, Mr. Said Farouk, Mr. Syed Hassan Al-Sagaf, Mr. Umar Munshi, and also please come back to the stage, Ms. Isfari Sifalingam, to join the photo session.
All right, on the count of 3, 2, 1. Yeah, thank you, panelists and chair. And now we will start the discussion with Dr. Ginanjar Dewandaru to lead this session. Dr. Ginanjar Dewandaru, the time is yours.
Ya, Bismillahirrahmanirrahim. Ya, Bismillahirrahmanirrahim. Distinguished speakers and participants, Assalamualaikum warahmatullahi wabarakatuh. Yeah, all praises belong to the Almighty Allah subhanahu wa ta'ala, the one who always shows us his mercy and blessings so we can gather virtually in this international conference. Peace be upon the Prophet Muhammad sallallahu alaihi wasallam, the greatest role model of all time for humankind. My name is Ginendra. I'm currently the Deputy Director of Islamic Economic Research at National Committee for Islamic Economy and Finance, KNIKS, and I'm honored to be your host today. This is our 6th annual Islamic Finance Conference, AIFC, with the main theme, Islamic Finance Role in MSMEs Empowerment, Boosting Capability, and Fostering Inclusiveness for Sustainable Future. The topic of panel session today is Islamic Finance Role, Improving MSMEs Assets and Capabilities Through Digitalization and Technology. In this session, the speaker will give you insight on how to empower MSMEs through digitalization of Islamic finance and the use of technology in improving MSMEs' assets and capabilities. We are very fortunate today to have our prominent speakers. The first one is Dr. Said Farouk, who is the Director of the Board, Senior Partner, Innovation Strategy, Government, and Financial Services Dinner Standard. The second one is Mr. Said Hassan Asagov, who is the Lead Economic Empowerment Program Specialist from Islamic Development Bank. And the third one is Mr. Umar Munshi, who is the co-founder and group managing director of Atis Group. In order to get Allah's blessing, let's open this event by reciting Bismillah. Bismillahirrahmanirrahim. So this seminar will take about 2 hours. It consists of 75 minutes panel discussion with 3 prominent panelists, 25 minutes each allocated, and 35 minutes interactive questions and answer session. I also would like to remind all the participants to please turn off or mute your speaker throughout the webinar to ensure the smooth conduct of the program. If you want to ask questions, please write your question on the chat room and Slido. Distinguished speakers and participants, please allow me to give you an overview about our today panel session. As we know, the current global economic pressure and uncertainty originated from major factors such as recovery phase from COVID pandemic, high inflationary economic regime, geopolitical risk, as well as bottleneck in global supply chains, has substantial impact on the segment of micro, small, and medium enterprises or MSMEs. In addition, SMEs still have to deal with their specific major issues that include capabilities to scale up the business, sustainability, the ability for their adaptation on the new era of economy 4.0 as the new normal. On the other hand, in many economies, MSMEs are playing a very crucial role as the source of organic growth, mainly on reducing unemployment and inequality gaps, as well as improving total factor productivity of the nation. Therefore, how to effectively empower MSME is considered as key policies and strategies not only to promote inclusive economy, but also to propel stronger economic growth and resiliency. Islamic finance has immense potential role to empower MSMEs' capabilities by utilizing the so-called core values of Islamic finance. The distinctive values of Islamic finance include risk-sharing finance to promote stability and resiliency of MSMEs, asset-based finance to boost real sector productivity, blended finance between commercial finance and Islamic social finance to ensure inclusive access to finance for micro until medium enterprise, as well as health value chain to ensure a very strong fundamental business from upstream to downstream. We also notice rapid adoption and development of digitalization and technology across multiple sectors globally. So therefore, the effective utilization of digital and new technology is considered as the core enabler for Islamic finance to realize its full potential in implementing its core values in real practices. Through this session, best practices in MSMEs development framework and policies, along with Islamic finance role through digitalization and technology in empowering MSMEs will be explored and discussed. Let me summarize the objective of this session are to elaborate more on, first, Islamic finance role and position to empower MSMEs. Second, the identified common and characteristics of Islamic finance instruments and tools used effectively and efficiently. Third is innovation and methods in Islamic finance to empower MSMEs. Fourth, equal level of partnership between institution and clients achieved through Islamic finance scheme. And last is technology and digitalization development to support Islamic finance in empowering MSMEs. Without further ado, let's start our panel session with our first panelist, Dr. Syed Farouk. So Dr. Syed Farouk, as a bio, obtained his PhD and previous degree from University of Technology, Sydney. Currently, he is a director of board and senior partner, innovation strategy, government, and financial services for the global consulting firm Dinar Standard, which also manages the media platform Salam Gateway and publishes the annual publication State of the Global Islamic Economy Report and the Global Islamic FinTech Report. In addition to his executive role, Dr. Syed Farouk founded and sits on the board of trustees as vice chair for the Responsible Finance and Investment, or RFI Foundation, and is the executive director of Crescent Foundation. His presentation will discuss about Islamic FinTech optimization in MSMEs financing, experience, and way forward. Please welcome Dr. Syed Farouk. The floor is yours.
Thank you very much. Bismillahirrahmanirrahim. Wassalatu wassalam ala khairil anbiya. Thank you everyone for your attention, and I'm delighted to present to everyone in the annual Islamic Finance Conference. It's a delight to be here, and I wish I could be there in person with you as well, and inshallah I will join you soon. I have a presentation, but I think the presentation context is more about what's happening in Islamic FinTech, and then I'm sure with Brother Ginanjar and the colleagues here, we'll go into a little bit more detail around the role of Islamic FinTech and its ability and its potential to facilitate the development of small and medium-sized enterprises, something I'm very passionate about personally, but also the data speaks to quite loudly. But without further ado, what I'd love to do is share with you our more recent launch of our Islamic Global Islamic FinTech Report, which we had the privilege of launching just last month. So it's fresh off the press, and what it does is it enables all of us to get an understanding of what's happening within the context of the global FinTech area, and specifically for Islamic FinTech. So I would appreciate if I can just share my screen, and I'll get on my way. Thank you. Really appreciate that. So the Global Islamic FinTech Report has got with us the support of a number of partners, including Qatar Financial Center, Aeon Digital out of the Middle East, Alami from Indonesia, DD Cab Group from London, and IFIN from the UK and the Middle East as well. We've also had a number of key partners from Indonesia support us, including Community National Economy Kananguan Sharia and FinTech Sharia Indonesia as well. And so we're delighted to get their data to support our work here. One of the interesting things is how fast Islamic FinTech is growing, which is really, really exciting for the facilitation of funding to SMEs. And I'll tell you why very shortly. But the key and interesting insight, as you can see from this specific data of the biggest highlight, is that it had a rapid growth from 79 billion, and it is projected to grow much more significantly by 2026 to 179 billion, based on historical growth rates. And that's what we've seen in the past few years of publishing the Global Islamic FinTech Report. We've had an average growth rate of around 18%, if not more, over the past few years. What's really interesting is that finance, and specifically Save and Invest, are the two largest categories of Islamic FinTech, which is really good, because I think in these two categories is where the transformative effects of facilitation, particularly on finance, can happen when it comes to small and medium-sized enterprises, but also facilitation of finance from capital holders to the real economy sector and to SMEs that actually need it. And as you can see, SME finance, crowdfunding, alternative finance, and peer-to-peer lending has been probably the largest segment of finance, and finance is probably the major segment outside of Save and Invest when it comes to the solutions that have come about in terms of Islamic FinTech, which all bodes well for what we're about to discuss when it comes to SMEs and their facilitation. And as you can see, Southeast Asia is a high-ranking area, and particularly Indonesia has been high-ranking. It has a number of fintechs that have deployed money into the economy directly. We have a prominent example sponsoring this report, but in addition to that, there are a number of other fintechs that are doing so. So it is a leading light. MENA and GCC are also facilitating a lot, and that's been quite exciting. As you can see also here, as is evident, Saudi Arabia has probably the largest Islamic FinTech market currently. And after that, it's Iran and Malaysia, and then UAE, and then Turkey, and then Indonesia. What we are inferring from this, and what's important for you to understand, is that this is the transaction volumes that we infer about in FinTech. This is the potential volumes based on a data model that we've proprietarily designed to figure out, well, what is the overall conventional transaction volume and what's the percentage that is Islamic. Now, is this the real potential? I don't think so. I think it can be far greater. For instance, in Indonesia, it's 4.2 right now because the transaction volumes in FinTech are lower. And Islamic finance is a lower percentage of the overarching financial system volume. But if Islamic finance is to gain more prevalence, that ranking can specifically and grow much higher in the longer term. Whereas in Saudi Arabia and Iran, as you know, the size of the Islamic finance market as a proportion of the overarching market is much larger, and therefore it's 26, almost a fairly significant amount, and therefore their proportion of FinTech transactions are also higher. That said, I think we're looking at global countries. Some countries are obviously dominating Islamic FinTech for their earlier investment in Islamic finance, but also because they are facilitating a lot of innovation currently. What is evident is that Indonesia has currently moved really fast when it comes to facilitating Islamic FinTech, and all credit due to all of the individuals in this room, including FIS, including Connects, and including all of the other partners like the Indonesian Sharia FinTech Association to facilitate and grow that space. And we hope that it's going to grow much more, and we think it has the greatest potential, to be honest with you, from all of the countries, because the enabling environment is there, the technology engineering capability is there, and so is the large and pliable market for Islamic FinTech. And that kind of covers my kind of formal presentation, and we have a lot more to discuss, I'm sure, with Brother Ginajar and the panel. But what we're really excited about is understanding from our understanding of the report, but also our studies, how SMEs can facilitate and nurture, be nurtured by Islamic fintechs and open up that market by using tools and technologies that Islamic banks generally or traditionally did not have access to. Thank you, Brother Kinanja.
Yeah, thank you. Thank you very much, Dr. Said. It's very insightful explanation and comprehensive. So I think the key point here is that Global Islamic FinTech report 2022 estimate Islamic fintech market size in 2021 to be $79 billion, right? And projected to grow by 18% annually to $179 billion in 2026, which is a huge potential. It implies that Islamic fintech is a growing trend now and the future, as it will help expand financial inclusion, particularly for MSMEs. You also mentioned that Malaysia, Saudi Arabia, Indonesia, and the UAE lead the index. So although OIC countries dominate top 10, no non-OIC ecosystem are developing very rapidly. So I think that based on the report, the index of 64 countries with a total of 19 indicators, which is very important, derived into 5 different categories: talent, regulation, infrastructure, Islamic fintech market and ecosystem, and also capital. Thank you, Dr. Said. So now we turn to our second panelist, Mr. Said Hassan Al-Thaqaf. So as a short bio, Hassan is currently the lead economic empowerment program specialist at Islamic Development Bank. He manages and guides the team that appraises and implements the economic empowerment programs portfolio made up of projects in several countries. Before joining ISDB, Islamic Development Bank, he was a manager for new business support at Spring Singapore, a government agency that supports the growth of small and medium enterprises. Said Hassan is a chartered professional in Islamic finance and holds a master in Islamic finance practice from International Center for Education and Islamic Finance, INCIEF. He graduated with an honor degree in business management from the Singapore Management University. His presentation will focus on so economic empowerment, monitoring the impact of Islamic financial transaction. Mr. Hassan, the floor is yours, please.
Thank you so much, discussion chair. Assalamu alaikum wa rahmatullahi wa barakatuh. Allow me to share my screen. Firstly, I'd like to thank the government of Indonesia for inviting me and for putting so much of importance on the field of Islamic finance, really knowing the value and the impact that Islamic finance can bring to the economy. Do you see my screen?
Yes, Mr. Hassan.
Okay. So I'll cover, in terms of the value proposition of Islamic finance, I'll cover what is the value proposition of Islamic finance, and then based on this value proposition, what is the impact? How do we measure impact? And from the impact, we'll then go on how do we collect, analyze, and use the data for decision making. I'll start with a personal experience of mine where I was in Kenya, and I was invited to listen to a research done by IBM Research in Kenya. And the objective of the study was to find out whether credit provided by Islamic financial institutions were an effective means of poverty alleviation or MSME development. And they did, desktop research, and they conducted interviews with Islamic banks in the region, and they drew, after 30 minutes of presentation, they made 3 conclusions. Firstly, more than 80% of financing of Islamic banks are through murabaha. Secondly, no substantial difference in how financing is conducted from conventional, other than changes in legal documentation, changing from interest to profit rate and so on. And so they concluded Islamic finance is a conventional finance growth in a different form. So how, and they asked for my reaction essentially, and This is the question that I'd like to pose to everyone in the all the audience. Do you agree that Islamic finance is different in form but not in substance? Some people may say they agree and say that Islamic finance is different in form and that is sufficient, that is good enough. But substantially it's the same as providing credit, as conventional finance. Or do you want to say that Islamic finance is different in form and in substance? Now, in terms of my response, I explained to the IBM research team in Kenya that Islamic finance is really measured on a spectrum. You can't say that it's black or white. At the very beginning, when you talk about Islamic finance, we are not just talking about Sharia compliance. Sharia compliance is the minimum requirement, but not the gold standard. So if you try and convert from a conventional finance, you change it to become Sharia compliant, you are just meeting the bare minimum requirements. But if you do not take steps in practicing true Islamic finance, then you're missing out on the value, substantial value that you can provide to the client. And among Islamic financial institutions, at least from the personal experience that I've learned, is that Islamic microfinance institutions have been more successful in tackling poverty alleviation through generating the value for the poor. And this is really in line with the verse of the Quran, which is the very basis of what Islamic finance is all about. From the Surah Al-Baqarah, chapter 2, verse 275, it states that people who consume interest or riba, say that trade is just like interest, but Allah has permitted trade and forbidden interest. So there is a difference between trade and interest, which is why Allah has permitted trade but forbidden interest. And this is the core, it forms the core characteristics of what conventional microcredit institutions do. They provide arm's length loans, they charge interest for profit, and it's a creditor-debtor relation. So I am a creditor, I lend to you, you are a debtor relationship. Whereas for Islamic financial institutions, the core function is to conduct value chain, to engage in the value chain, to conduct trade and investment. And because of the effort, risk sharing, and all this, you can justify a markup or profit sharing, and it's a business partner relationship. So now that we know the value proposition of Islamic finance, let's go into seeing how we can measure what is impact. But first we'll understand what is the concept of impact. And there are these three definitions by Oxford, OECD, and World Bank. Essentially, they focus on two aspects. To measure impact, you have to measure the change in benefit, and you have to attribute this change to the intervention that you're doing, which is in the case microcredit. So if you were to build a road, and this road were to go to rural areas, right? You need to demonstrate that the poor, after building the road, benefited from the road. They had a change in terms of the well-being, improved incomes, and so on. And you have to attribute that change with the building of the road. So although it is a rather simple concept, it's actually very hard to measure on a practical basis. And that's why there's so many different types of impact methodologies. You have the scientific method, which is the randomized control trials, and various quasi-scientific methods, statistical, matching, pre-post, and so on. These are all empirical methods, and researchers, they know this much better than I do. And I won't cover this, each one of them, but rather I'll focus just on the gold standard, which is randomized control trials. So what has randomized control trials done so far in the field of microfinance, and what is the lessons learned, and whether they've demonstrated impact or not? If to do this, we look at the benchmark of RCTs, which is the Abdul Latif Jamil Poverty Alleviation Lab, JPEL, and they have done randomized control trials for many different fields, including microfinance. And in fact, Professor Batterjee and Professor Dulo won the Nobel Peace Prize in 2019 for their work in doing randomized control trials. When we go to the website and we search microfinance, we see 78 RCTs done by this. And if you look at the RCTs, there is a report that they produced, which they randomized, and they did a sample of the RCTs, and they tried to find out, does conventional microfinance or credit have an impact on the poor? And these are some of the results that they have found in terms of the key lessons learned. If you look at the ones highlighted in yellow, the ones that refers to income, it says microcredit access did not lead to substantial increases in income. Despite evidence of business expansion, none of the 7 studies found a significant impact on average household for borrowers. And there is little evidence that microcredit access has substantial effects on women's empowerment or investment in children's schooling, but it did not have a widespread harmful effects either. And it goes on to, the other benefits, or they say that the demand was modest, credit was improved as a result of microfinance, and also they had helped the afford households in terms of more freedom. So there are some fringe benefits, but in terms of the core impact on the income of the clients that receive the credit, which is the core function of the credit itself, they are unable to draw a solution. They cannot say that it has benefited or not. And they actually address why they cannot do that. In the same report, there is a section called the problem with profit. And here I've lifted it, you can read in your free time, but essentially the core message that they're saying is that they are unable to attribute the income, if there is any increase in income, whether it's due to employment or due to business, or whether it's due to the employment or income from the business or from remittances. And whether, if let's say the business, there is some reinvestment in terms of working capital, is it due to a growth in the business or is it an increase in expense? They are unable to measure the change and they are unable to attribute the change to the credit. So these are studies that cost $250,000 to $500,000, taking about 5 years to do. But after all these studies, what have we learned from conventional is that essentially we cannot claim that, say that microcredit is, at a conventional sense, it helps or creates impact towards poverty alleviation. But the general understanding is that it is not a silver bullet for poverty alleviation. This is a statement that we can accept and everyone agrees to. The other non-financial services needs to be put into place and support in terms of poverty alleviation. And it depends on the execution. Higher interest rates are less likely to lead to positive impact, which is a conclusion that makes sense. Now, what is the claim of Islamic finance? Here we are trying to make 2 claims, right? Islamic finance, if practiced to its fullest potential through conducting trade and investment activities, will create impact. And we can measure and monitor this impact created by Islamic financial institutions. That is why I said this is a rather bold claim, and we are answering really million-dollar questions, because billions of dollars have been used to try to answer these questions, and let's see whether we can do so together. In terms of the theory of change, of how we want to justify or validate this claim, is that we are trying to measure the risk and effort. There is a risk and risk sharing and effort in terms of conducting the trade. We want to measure this value, attribute this value to the intervention, and therefore we are able to declare impact. So can we measure the impact of Islamic finance in creating economic empowerment through value creation of the poor? And how do we measure? What are the indicators? Let's try to do it in a practical manner. I'll refer to the monitoring and evaluations toolkit that we've done, and these are all there. Under each financing mode, murabaha, salam, ijazah, these are all different ways of business transactions, essentially. Musyarakah, mudarabah, and hence they have different indicators, qualitative indicators, which measure non-financial value added, and quantitative indicators, which measure the income increase or the benefit generated from their transaction. I won't be able to go through each one of them, but I will go through just one, which is murabah, which is the most commonly used financial instrument in Islamic finance. Let's go to the qualitative impact indicators. If there is, once the conventional changes, a conventional loan is converted, or there's an introduction to become a murabaha transaction, then we all know that there are changes that needs to be made to be Sharia compliant, right? Changes in terms of late fine management, in terms of making sure it's Sharia compliant, and so on, client acts as purchasing agent. They mitigate the harm of over-indebtedness, but they do not necessarily create value add in the transactions business. So it is 0 in terms of the rating that we give. If they pay directly to the supplier and takes ownership of the product, this is an added value. We give them 1 point, it mitigates payment risk. And if they conduct quality check further, they ensure the quality of the asset, we give them another point. If it is they provide assets transportation to the client, again, they make sure that the asset is being transferred safely to the client. They provide information on prices, another asset value add point. Marketing, packaging efforts, another point. Reduce business risk exposure, which is very important, another point. If they provide capacity building in terms of financial literacy or other business-oriented capacity building, another point. And if they provide technical capacity building to help to the client to value add their product and to sell better, an additional point. So this is the way a financial institution can value add and can go beyond credit and can provide non-financial services, which are important in terms of helping the MSME to grow. Now, those are qualitative indicators. Can we measure how much the client actually benefits from a murabah transaction? Let's take a concrete example. Client needs $2,000 to buy fertilizer and seeds, which is repaid over 6 months. So the MFI is supposed to buy the fertilizer on behalf of the client and sell it to the client. Now, instead of just buying it for $2,000, they negotiate and gets 30% discount, and hence is $1,400. So the amount of benefit, this transfer, this negotiated price is no more. The client does not get $2,000, but rather gets $1,400 for the fertilizer. So the benefit that the client has actually earned as a result of the transaction is $600. And we can actually measure it over 180 days. That's $3.33. So can we measure the $600 benefit gained by the client as a result of the murabah transaction? Yes. Can we fully attribute the $600 transaction to the murabah transaction that has been done, which is a buy and sell transaction? Yes. Is this a better approach than randomized control trials, which is so takes a long time, is very costly? Yes. And is it an easy and accurate measurement of impact? Yes. In fact, can we even go one more? And can we say that does this client come out of poverty as a result of murabah? In this case, we can say that the client has gained $600 of benefit over 180 days, which is $3.33. I know in the case of Indonesia, the poverty line, you take a basket of goods. If I'm not wrong, it's about $4.50. So if you measure $3.33 over $4.50, so it's about 74% of contributing towards the poverty line. So in this particular case, we cannot say that it has brought the client out of poverty from in Indonesia if the poverty line is $4.50, but it has contributed towards bringing the client out of poverty. And we can measure that tangibly. If the poverty line is set at $2, then yes, we would consider it to come out of poverty. So this is the way that we can even measure how many clients have come out of poverty, has benefited and have helped to become out of poverty as a result of the murabah transaction. So Islamic finance in practice in the form of economic empowerment, which is value creation, risk sharing, would generate value, and we can quantify this into impact. And this is unlike conventional finance. We can measure it accurately and practically on the financial transactions on poverty alleviation. And that's we can see, we measure the impact, measure the value, attribute the value, and you declare the impact. And as I've mentioned, it's cheaper, more efficient than RCTs. It's direct, simple to measure, clear attribution. We are really answering million-dollar questions with a lot cheaper, which is with much lesser resources than how RCTs used to measure. And they're quick in terms of results. How do we collect on a practical basis, analyze and use the data will be the next thing that we'll discuss. We have to look at it from the evolution or the journey of a microfinance institution. First, they start off, like I mentioned, doing murabah. And this, I'll give the example of one of my projects in Albania. So they converted, from, they introduced the Sharia compliant product called Rabaha in the agriculture sector. It's an agricultural microfinance institution. So fine, they made the changes, they changed the interest rate to profit rate, they made it Sharia compliant, they did the necessary agreements are all in place and so on. If it's being restructured, no change in selling price, all that is taken care of. They do this for 1 year. And then after 1 year, I come back, I ask them 3 questions. First, what are the assets that are being purchased under Murabah? I ask them this question. Second, who are the suppliers that you purchase them from? And the third questions, are the prices that you purchase, are they competitive? Now, after 1 year, they tell me they don't know the answers. They were puzzled. No, they don't know the answers to this. I told them, okay, look, hire an intern or hire someone, right? Just put all this information, it's already in the Murabah contracts. They're all there. You have the selling price, you have the purchase price, you have the suppliers details, you have the details of the product, all that is in the Murabah contract. Bring them all from the drawers, put them on an Excel spreadsheet and answer these questions. They said, okay, it doesn't cost them much. And so they did this. And they told me, it's interesting, we found out that our Murabah product was used mainly by greenhouses. Okay. And we were buying from so many different suppliers from Tirana and from other regions, because from different parts of Albania. And some of them were cheaper, some of them were more expensive. All right. So what should you do? So they tell me, okay, next time we have another client who wants a Murabah for a greenhouse, we'll refer them instead. If they say, I want to buy from supplier A, they'll tell them, no, don't buy from supplier A, buy from supplier B, and we will buy on your behalf. This is number one. What else can they do? They say that, okay, we will negotiate with the cheapest supplier to even get a better discount from the client for the client. So this is the way you are able to value add. And this is step 2, step 3, and step 4. Collecting market data, analyzing market data, determining course of action. And then once when they know more about the sector, they realize, oh, their clients are actually growing strawberries with that greenhouses. And now they're looking at developing a salam product but they're doing a study on the strawberry sector to see how they can do salam, and perhaps even machinery for the development and processing of strawberries. So this is another area that they can look at in terms of ijara financing. Now, if they really know the sector very well, then maybe they might introduce musyarakah, mudarabah. But even if they don't, can you imagine the value that they are providing to the poor? And this is all even without any form of fintech. It's a simple Excel spreadsheet, understanding the sector and deriving data, market data from the real sector and making decisions on the sector. Now we want to make that even more rich in terms of data by introducing fintech to collect the data. All MFIs have core banking solutions, but they only collect financing data. What if they were to collect real sector data, details on the suppliers, on the clients? And this data would then be collected, and they would have another layer, which is the first layer, and the second layer would then be in terms of the artificial intelligence or machine learning. And based on this analysis, the artificial intelligence and machine learning will help to analyze the huge amount of data that has been collected. And based on that, they can make certain recommendations, and this could include, if they are performing well, to mobilize resources in the form of crowdfunding, or if there are certain areas that need to improve on, to provide a capacity building and advisory, or if there are assets, based on the asset data, we can even refer them to e-commerce or marketing to further enhance the way that they're doing business. This is the data for the policy advisor or for the supervisor or the donor, right? For the MFI, the data is even more important. They'll be able to tell and mobilize resources for the investors to know whether the financial institutions is profitable sustainable, and they're able to mobilize those decisions, mobilize those investors. They can also determine whether should we go into strawberry sector or potato sector by understanding the sector, by getting data on the sector. Are they able to generate value, or is the sector too competitive? Then they may not be able to, they may not need to go into that sector. And one thing that we have learned is that once they have reached a certain level of value creation, then they realize really collateral is not necessary, because they're mitigating the risk of the real sector, and hence the risk of the repayment is not necessary and collateral is not needed. And in the case of Albania, there is no collaterals for individual loans. In addition, in terms of operational decisions, should the MFI buy from wholesaler or retailer? Should they outsource the transportation? Should they store the products for better profit? All these are decisions that they can make. So you can see how rich the data and what kinds of decisions can be made. This is one part of the economic empowerment impact performance indicators, but also you have performance indicators on financial and social, which are covered in the monitoring and evaluations toolkit. I won't cover them here, but essentially from this whole, we can get a very comprehensive perspective and rating on how we want to help our microfinance institutions to progress. In short, in terms of recommendations, we hope that the M&E standards developed under the toolkit is adopted by the government in Indonesia and also to everyone in this conference, and to collect data on not just the core banking solution should collect data, not just the financial, but also non-financial indicators, sector data, asset data, as I've mentioned, and to apply big data on how to analyze those data to make better decisions. And when we are able to do that, right now, if a client, a microfinance institution is only being Sharia compliant, then we will help them to move towards Sharia performance by helping them to create value, to create substantial value to the client. And hence, I conclude by, again, coming back to this question. I hope that I've been able to convince that Islamic finance is different in form and in substance. If you had a different idea before this conference, before my speech, then this is the little impact that I hope that this little intervention is able to create in this conference. For more details, please refer to the Monitoring Evaluations Toolkit on our website. You can download it for free. Thank you so much, and I'll hand over the time to the chairman. Assalamualaikum.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Mr. Said Hassan. So it's all about substance over form, which is always a $1 million question that we have to address. Very insightful explanation and deep content. So I think the key highlights of your presentation is Islamic finance practice in the form of economic empowerment emphasized on value creation, right? And also resharing. And Islamic finance can accurately and practically measure the impact of financial transaction on poverty alleviation. And you also mentioned that among other Islamic financial institutions, Islamic microfinance institution has shown to be the most successful in tackling poverty alleviation by generating value for the poor, which will not be possible under the conventional methodology. Thank you, Mr. Hassan. So I think we will proceed with the third panelist, Mr. Umar Munshi. So as a short bio, Umar Munshi is a social entrepreneur from Singapore. He is the co-founder of Athis Global, or Athis.co, an award-winning group of investment and crowdfunding platforms with regulatory approvals in Malaysia, Indonesia, and Oman. Athis has firmly established itself as the leader in fintech for impact-focused and Sharia-compliant private capital market. Umar is the president of the Islamic Fintech Alliance, a group of pioneer Islamic fintech founders. So today he will discuss about MSMEs financing through Islamic Social Fund, optimizing zakat and wakaf with digitalization and technology. Please welcome Mr. Umar Munshi. The floor is yours.
Assalamualaikum warahmatullahi wabarakatuh. Thank you very much, Pak Ginanjar and everybody. A lot of appreciation to the Indonesian government and the organizers for giving me the honor to share today. And inshallah, I hope to do justice to the topic. I'm by no means an expert in wakaf or zakah, but what I do have and what we do have is, you can see my screen, yeah? But what we do have at Ethis is quite a number of years of experience in fintech. And we have also explored and run programs, projects, pilots in implementation of fintech, or specifically crowdfunding for zakat and wakaf, both for SMEs as well as in the past also for real estate or for housing development. Yeah. Now, so what I will share today is direct experience, first-hand experience, most of which we have attempted, and some of which we've had certain degrees of success, and some are still in the concept stage where we hope to roll it out in the future, or for others as well who may want to approach this matter in the same way. Right? And our points and ideas that I will share, I would say not really very out of this world. It has been done, but we see that with fintech, with good use of fintech, with appropriate use of platforms and technologies that are already available, that's where we can really deploy the value of wakaf and zakah to the real economy, inshallah. Yeah. So I'll just take a few minutes to touch a little bit about the Ethis group, so you can understand the context of where we come from and how we utilize our own fintech platforms within the group to deploy zakat and wakaf projects. And then I'll go to some of the specific examples and use cases for wakaf. And last but not least, I'll go through in a little bit more detail how we have used or how we have channeled zakat and Qard Hasan, which is not part of the title of this session, but is definitely a very key component of social finance. And so I'll share a little bit more detail on that in a short while, inshallah. And very quickly, for Ethis, we alhamdulillah have licenses. It took us many years to get the different licenses because it's a new sector, a new license in many countries. Alhamdulillah, we have the full P2P license from OJK in Indonesia. We have an equity crowdfunding license in Malaysia. And we have a new license in Oman, which allows for both equity as well as financing out of Oman. And one thing interesting is that the scope of the projects or companies that we can fund and that we can raise funds for from the crowd from Oman is actually borderless or global. So we can raise funds for companies in Oman or outside of Oman. Yeah, so that's a very exciting new thing for us. And in a nutshell, this is trying to summarize or encapsulate what we do. Ethis is a combination of the words ethical and Islamic, and we basically want to match funds on one side from communities with many institutions, retail, accredited NGOs, foundations, and so on. Whole range, whole scope of funding of funders, investors, and donors, right? And I've highlighted the social parts of it. And through our platform or platforms in different markets and with different scopes to match it to business and social needs. Yeah. So the platform or crowdfunding platforms in general, I think all platforms, the way we view it is there are two types of flows. One is it helps to move money that's already moving, and it helps to enhance that flow, to make it more transparent, to make the process easier, to make it more compliant or more governed in a proper way, and so on. So existing money that's already moving, and at the same time activating new money, right? New flows that in the past was not able to move or was too tedious, or people are not aware of such opportunities. Those flows can now be activated. And for Ethis, I think for Indonesia, for P2P especially, and now for securities crowdfunding, a lot of existing flows are moving and a lot of new flows as well. For ETHIS, what we have done in our past is mainly we consider it to be new flows, meaning for example, what we've done in Indonesia is we've facilitated, alhamdulillah, investments from 50 different countries into Indonesia, into projects to go to our P2P platform. Right? So that's something that we consider to be new behavior. And when you talk about social funds, social finance, wakaf, zakah, sadaqah, infaq, and even Kar Hasan, that's where we feel there's a lot of potential for new flow. But as we know, there's already a lot of big flow of, for example, zakat. Right? Zakat is huge globally. So that definitely should be a significant component of whatever we can do as a platform or a group of platforms. And of course, the rest of the ecosystem with any other fintech players who are suitable, inshallah. But these are just some pictures of some of our past accolades and media articles, yeah, just to share with all of you. All right, so now we'll focus on the first part or the second part of this my short presentation, which is about wakaf and how we see from our own perspective and experience, and taking a lot of material that's really widely available, a lot of research and case studies that's floating around on the internet and in many organizations, of course, like the IDB. So here a few points I want to share before jumping to the specific examples. What we realized from reading all this material and also from our own experience, alhamdulillah, we also have board members who have very deep and strong wakaf experience, mainly in Singapore in the past. Yeah. So we see that the power of wakaf is in the fact that it can have the mandate or the objective. It should, of course, have this mandate objective to do or to reach social and commercial objectives, right? And we feel that this is where sometimes there's a lot of challenges when dealing with purely commercial funds or sometimes purely social funds, because social funds may not be managed or run in a sustainable manner. By and large, that's very common. And commercial funds may find it challenging to basically allow for too much social considerations, because sometimes they will definitely have a trade-off with commercial considerations, right? So wakaf is able to balance the two, and this mandate of the wakaf can be fixed or can be set from the very beginning by the waqif, yeah? And of course, the impact can also be immediate or long-term. And the second point zooms into one component that we identified to be important, which is the cash flow component. As long as there's good, consistent cash flow, it need not be maximizing profit cash flow, right? It's just cash flow that is calculated in a way to allow for both the upkeep and maintenance and running of the wakaf asset or cash, and still have a component that is made available for the social benefit or religious benefit, right? So this is the critical factor that we see. Whatever kind of wakaf, whether it's cash wakaf or physical wakaf or land or whatever it may be, the cash flow component is what we feel is very, very critical to make wakaf sustainable. And later on, I'll touch more on how directly we can potentially do this with SMEs. And last point is what I mentioned earlier, fintechs, P2P, securities crowdfunding, equity crowdfunding, these kind of platforms, as I mentioned earlier, we can activate new flows and facilitate existing flows. So that is a very critical factor or role to facilitate, the raising of funds and the channeling of funds and the distribution of funds. Of course, platforms do more than that. We also can track, report, and so on, working on our own or together with other players. Yeah. Okay. So, there's a repeat of the first two paragraphs. So the use cases are at the bottom here. There's 3 use cases that we want to highlight today. One is in the specific context of SMEs or MSMEs. Here, a physical asset can be utilized by the SME, right? So this could be very wide range of possibilities, from farming, agriculture to shop houses used by businesses, or even certain kinds of assets that can be utilized for new businesses or operating businesses, right? For example, a building that can be used for educational purposes. So here is where MSMEs who have the capability, or who can be trained, or who can be gathered to provide a certain capability, charge an affordable rent, potentially with a profit sharing component. So when we break it up this way, the affordable rent, how we look at it is we have buckets of funds. So the rent helps cover costs, and the profit or the upside can go to the social component, right? So when business is good, more charity, more benefit, more social and religious funds can be given out. When when the business is not so good, then the wakaf is still sustainable in terms of cash flow, and the SME is not stuck or having high rent pressure the way they would directly in the open commercial market. So that's the first use case that we'd like to share or highlight, and I believe this is probably already being done. We do know of some examples of this, and we hope to in future do more of this on our platforms and scale this up, inshallah. Number two is wakaf managed as a fund. I think this is quite straightforward. This is a cash wakaf fund or an investment fund. It is managed as an investment fund, and this investment fund can directly or indirectly invest in SMEs in various kinds of for various kinds of funding needs, whether it's direct microfinance or just now as shared by one of my esteemed panelists, the murabaha transactions, or whatever kind of Islamic instrument that we choose to implement or that's appropriate to implement. And of course, in this case, because it's a wakaf, we can balance the social and commercial objectives. So it should not be something that's exploitative or punitive on the MSME. Right? It can be, in a way, a friendlier, more participative agreement or approach to investment. Right? So here, of course, the wakaf in terms of keeping the wakaf asset intact is always going to be a key consideration, and that's something that needs to be well articulated and communicated and agreed upon with the wakif and the trustee or the manager right at the onset, and continuously revisited over time. And that's how we view the cash wakaf approach in a very very brief overview. And the third one, I guess, is quite similar to the first one. Instead of land, it can be wakaf assets that are purchased, right? And these assets have direct impact, direct contribution, direct value to MSMEs, right? Be they some kind of equipment, machinery, or vehicles. And this is something we've done quite a lot on our platform, globalsedekah.com in Malaysia, together with some of our bank partners here, specifically Alliance Islamic, where we have provided for example, for home-based MSME doing some gorengan, right? Cooking some fried snacks. They have small what you call it, kitchen equipment, and we come together to buy a more significant piece of equipment that she can use as well as others around her can use, and that is a wakaf, right? So this is something that we feel is also very powerful. And similar to the earlier points, a portion of this income must go to the upkeep and eventual replacement of parts, replacement of the actual asset, and so on. Right. So these are three use cases that we would like to share that we have tried ourselves for some of them, or we have supported others to do so. I feel that there's really huge potential for any one of these. In a country like Indonesia, with the fintech companies that are already there, with the institutions that are already there. But of course, it does take a lot of effort to get this off the ground. And then from there, continuous adjustments and improvements to make it as optimized, inshallah, as possible in terms of the commercial sustainability side, as well as the impact and religious objectives side of things, inshallah. Right. Now, so this is just a snapshot, right, because I don't have much time, but I wanted to jump a little bit deeper on this, into this particular program that we have run in the past about Qard Hasan, or zero cost benevolent loan. And I'll just take 5 minutes to just quickly go through some details in case it's not familiar to some of you here. So what we did was a pilot program in under Global Sedekah in Malaysia, where both activities are fundamentally similar, but different in terms of I would say the transactions and the approach is similar, but actually the fundamentals are a little bit different, right? Let me elaborate. So for the first one, we have microfinance institutions or financial institutions, and funds, charitable funds, charity funds are raised from the public or from other providers, from other donors, and that is then given out as a Qard Hasan. So it is like a loan. It is a loan essentially, and the SME or MSME is obliged to pay back and commit to a certain schedule with certain amount of flexibility given if the business were to have challenges to pay the amount on time and so on, right? And the second one is a little bit softer because here we utilize sedekah and zakah. So this requires a direct intervention or guidance because funds are given and the funds are not directly tagged to a specific business use, right? The first one, typically, the loan is extended, for example, because they need to pay for some business expense, right? But for the second one, because it's zakah as well, there's different approaches depending on who we work with. Some are quite insistent that the zakah needs to be utilized quite immediately for sustenance purposes, whereas for others, they're able to spend it for wider users. In any case, the point is to help this business or help these micro enterprises either on their social, family, personal side, so that they can focus on business, right? Because these two are interlinked at that level from our understanding, or directly to help them to speed up their business. Now, either way, the point is for the funds, as much as possible, to flow back and to be recycled or reused to be loaned again to others, right? So that's where there is this revolving charity concept, right? And the basis of the revolving charity is the Qard Hasan itself. Yeah, we are aware that this is not something that may be feasible, for example, in cases where the funds is commercial, because in this case, we are looking really at the very lowest level or segment of the MSMEs who are not commercially stable in that sense, right? So here is where the focus is on amplifying the impact with the knowledge or with the assumption that the money will eventually be exhausted over many cycles, right? So there's 10,000. In this case, we have a very high non-payment rate of 30%, and we did some calculations. In the end, we can disburse 30,000 from that 1,000. So here, from a very, very conservative kind of illustration, we have actually tripled the amount of social funds that's made available. Yeah. Okay, so I wanted to just touch on this, and last few slides, when we do this, it's not just the provision of the funds that's useful, but these are some theoretical impacts that we believe, inshallah, and based on our reading as well, we believe will be very significant, right? So the first one, of course, in the current scenario and situation of the pandemic slowly easing off, a lot of businesses need some jump start, right? So we believe that is very timely. That's the first point. Secondly, a lot of data can be tracked, recorded, and processed, as also shared by earlier panelists. Alhamdulillah, we can process the data. We can use emerging technologies or even existing, quite basic technologies even that can help to create credit profiles of these MSMEs, and then from there they can go up the ladder to receive other forms of funding, commercial or social, right? And last but not least, I think this is also very critical to prevent dependence or to reduce, borrowing or financing that may not be in the best interest of the SMEs or MSMEs. Yep. Okay. I have more slides, but this is not so related. Just wanted to share that we do also have some plans, inshallah, for Wakaf in Indonesia. And that's something we have tested in the past as well. But the direct impact on MSMEs is a little bit different, is indirect. So I will not share too much about this. Just leave it with a little bit of mystery and end my session now. So thank you everybody for your time, and inshallah this has been beneficial, and we hope to make all of this a reality over time with the assistance and support of the ecosystem as well, inshallah. Thank you.
Thank you. Thank you, Brother Umar Munshi. So I think this ethics, right? Ethical and Islamic is one of the best example whereby the sustainable finance, and you have technology as enabler in order to optimize the impact. So all the core finance, all the financial product can be implemented through digitalization. So I think that's one of the best practices that you can learn here. So now we move to question and answer session. So I think the committee, could you help me to display the questions for the speakers, please? Yeah, I think we can have the question here from Mashita Jakarta. I think the question is for Dr. Said Farouk. So how did the standard predict the Islamic fintech development in non-Muslim majority countries in the next few years? So I think we organized this question and answer by one question addressed to Dr. Said Farouk. So please, Dr. Said, you may answer first the question, please.
Thank you. And as many of you know, and thank you very much for that question. I think, as many of you know, and Brother Umar knows, is that unlike potentially some of the major Muslim majority countries like Saudi Arabia and UAE and Indonesia, the Islamic finance and the development of Islamic finance has also been accelerated by specific non-Muslim majority countries, including the United Kingdom more recently, and that's because the enabling environment in that country has been quite supportive of innovation generally, and therefore also Islamic fintech specifically. What we are going to expect to see is that two places will really accelerate the development of Islamic fintech in the near future. And what my hope is that that's going to then have a ripple effect on the development of Islamic fintech in the Muslim majority countries. And that's, of course, the United Kingdom. The United Kingdom has been a traditional source of innovation, particularly because of the competition of agenda that's facilitated the entrance of very small players into Islamic fintech and fintech generally over more than a decade, I'd say, that has been encouraged by the Financial Conduct Authority in the United Kingdom. What we'd expect to see is that in addition to that, besides the additional flourishing of that, is a lot more partnerships like we've seen more recently between Kestrel and Bank Islam in Malaysia. Many of that to happen where the innovation and the transferring of technology happens between those markets which have a more evolved innovation ecosystem and Islamic markets like Malaysia, Indonesia, and the like. Outside of that, the other major market where we're seeing quite a lot of movement and some transformative moves has been, in terms of non-Muslim majority countries, has been the United States. Lots of investment apps are coming out of there. And that's particularly not because it's a large market. It is a fairly large market as a non-Muslim majority one, but because of its very significant and large, what you call equity capital markets depth. What that's facilitated is a very low friction and cost for startups to set up companies, to trade in equity capital markets, and generally all securities. And some of those opportunities are probably going to go global soon. So when it comes to non-Muslim majority markets, I'd say that the US and the United Kingdom are probably the two that are going to lead in this space. The others just probably don't have the necessary enabling environment to do that. And I think those will help kind of cross-border opportunities of growth to happen across Islamic fintech, where some of these companies will grow naturally to the Muslim markets as a natural phase of evolution. And we saw this perfectly in the growth and expansion of Wahid. As you remember, Wahid Invest was predominantly focused in the US and UK and elsewhere, where it was easier to get licensing in the initial stages. They then moved very rapidly, based on investor interest, on core Islamic markets. Because ultimately, if you want to get mass and size when it comes to Sharia compliant investment and get customers, the few large markets with sizable disposable income for investment happen to be Southeast Asia and the GCC region, and you could extend it beyond. But these are the two ones which either have population on their side or they have disposable income on their side, and that's where Wahid is expanding, and that's what we'll probably expect to see, how the knowledge and innovation transfer will occur from what you call traditional non-Muslim majority countries to Muslim majority countries.
Yeah, thank you, Dr. Said. So I think for the next question, please committee can show us again. Okay, I think the second question is to Mr. Syed Hassan. What is actually the basic principle of Islamic finance than conventional? Is it about the akad or contract and no riba, or is there any other basic principle that need to be considered for the impact assessment? Please, thank you.
Thank you so much for this. Is a very excellent question. If you were to go through each different financial transaction, when we talk about murabaha, we talk about salam, ijara, istisna, musharaka, mudaba. What are all these transactions, right? Murabaha, buy and sell. Salam, advance purchase. Ijara, leasing. Istisna, construction financing. So, musharaka, profit sharing. Musharaka mutanakisa is decreasing partnership. So all of these different type of financing, they are all business transactions. And this is the important thing. If you were to ask what is the financial transaction or financial product that has no business transaction, there is only one. What is it? Qard Hasan, right? With interest-free loans. So if you do not want to provide interest-free loans, interest-free loan is one model. If you want to go outside of interest-free loans, then all other financial transactions are business-oriented. And hence there is a akad, an agreement to conduct business, to engage in the value chain, to undertake certain risks, to undertake certain business transaction by trading or investment. So this is the very core basis of what Islamic finance is about. And when you do business, it's not about credit, it's business first. And then the credit may come subsequently as a result of the business transaction. But the core function is to do trade. And when you do trade, then you need to be able to value add in the trade. And hence, if a trader does not maximize his potential and maximize the value in doing that trade, then that trader will not be competitive. And we want the financial institutions to be that trader, to conduct that trade in a more effective and a manner that would create impact, that will create value, and that will create impact. And that is the core function and core purpose of Islamic finance. Thank you.
Thank you, Mr. Syed. So I think, again, it's all about substance over form, and I think substance is very important to be implemented.
Absolutely.
And aligned in line with what Dr. Syed explained before. We need the ecosystem to build that. So I think the ecosystem need to be aligned to the substance and to ensure that the impact is optimized. Okay, I think we move to the next question from the participants, please. To Brother Umar Munshi. So is it possible to utilize Waqf land combining with CSR to provide loan rent houses for low income? If so, how to make a scheme to make it real? So I think this need a real practices, right, in the industry, how to implement this question, please. Please, Brother Umar.
All right, thank you very much for the question. So I guess to give a more general response and then zoom in to the specific context of the question, from my understanding and from our experience also, wakaf can be used, a wakaf can be a flexible, in a sense, instrument or contributor to a particular project. So one of which is what was mentioned just now as the land can be available wakaf that's already there, or a dormant wakaf asset that can be activated to be the land that is used for housing or other purposes, right? Because I believe that there's still a lot of wakaf land that is not productive, right? Some of them, of course, may face certain challenges like bad location or something along those lines, or accessibility. But yeah, in theory, I believe the straightforward use of wakaf is as the land itself, as the asset of whatever you are developing for the SME. In this case, in this case, housing, right? So the wakaf can be the land. The land can be wakaf, and the housing can be built on top of the wakaf. In this way, I guess there's practical implementation would be that the house owner or the owner of the asset will need to have a lease with the wakaf, right? And maybe I won't go so much into the technical side, but essentially you cannot buy the wakaf, so it has to be a lease from the wakaf. And typically, from how we do it, for example, in Singapore, how the regulate waris, how waris, the wakaf body does it here, is that there's a long-term lease. Yeah. Now, for Indonesia, I think we potentially can also have various different approaches. So the asset itself can be an investment, right? The asset on top of the wakaf land, right? So we're building houses. That can be an investment, or there can be a contribution as wakaf, or it can be any other kind of funds, right? Of course, whatever kinds of fund that comes, whatever kind of capital that comes in for the asset will need to be treated appropriately, right? So to your question, definitely there can be CSR element of contribution to develop the asset on wakaf land. But what we were trying to share earlier is to find a way to also make it have some cash flow. And that's where if you are working on a project for housing, it could potentially make sense to also see if it's feasible to have some commercial activities there as well, right? So that there's another element of business activity on the wakaf itself, not just the residential side. Yeah, so I guess that probably can be sufficient for now.
Thank you, Brother Omar. So I think Singapore is also one of the best examples for wakaf practice, right? And enabled by technology, I think can be through integration between Islamic finance and technology. I think we can move on to the next question. I think to Brother Omar again, how you manage the risk of wakaf fund reduction, since wakaf one has to be maintained for the long-term use. Yeah, please, Brother Omar.
Yeah. So the example that I shared earlier, I'm not sure whether you're referring to that, the Khan model. That one is currently, in the way we're looking at it, is not so much of a wakaf, because as you pointed out, typically a wakaf is meant to be eternal, although I'm aware that there is the temporary wakaf structure. But I won't go into that because I'm not an expert on that. But yeah, I think by and large, wakaf is expected, or the initial intention of the wakif is to keep it to be permanent, right? And maybe the other panelists can also share. I'm sure they also have their own perspective on this particular question. So I guess my response would be, if the wakaf is meant to be perpetual, then it may not be suitable to be fully invested into high-risk products or opportunities. But what it can and should do is to have a strategy as a whole, if it's a cash wakaf fund, where a component or a portion of the capital, the cash wakaf capital, can go to higher risk and higher return investments, and the remainder can go to more lower risk kind of investments, so that you balance out the risk for the fund in the long run, on the long term. While still very important in my view is to still have some risk capital allocation if the fund is sizable enough, right? Because I think in the Muslim world, in the Islamic finance world, there is a lack of risk-taking, which is strange. But for Wakaf, it's not meant to take large risk. Yeah, so a small component of a full Wakaf fund can go towards riskier, high impact or high return investments, inshallah.
Yeah, thank you, Brother Umar. So next question, please. I think maybe yeah, for Brother Umar, how to manage the social crowdfunding which is trustable and follow the Islamic rule? As you may aware, the case of SCT Indonesia. I think you may aware of this case, please.
Yes, thank you. Sensitive topic in many countries today, in Malaysia as well. There are some high-profile cases, and there's even jokes today that if you want to be a millionaire, set up an NGO. So, I mean, this is how social media is like, right? Whether it's true or not, Allahu Alam. But I think one thing that's lacking in many countries is, in general, not just for Islamic social finance, but good governance and regulations to support the social finance sector. I mean, coming from Singapore, I give reference to Singapore. In Singapore, there's a lot of very robust regulations. There's a charities commission and so on. But in Malaysia, we don't have that. I believe in Indonesia, I'm not sure whether there's a full authority in charge of this area. So, I mean, at the operator or the NGO or the platform level, self-regulation and self-amanah, of course, is very important. But I feel that the higher authority needs to be there as well to regulate. Yeah. But back to platform context is, as a market player, as a platform, how do we maintain it? I would say it's not easy because online you don't really know what's going on, and there's so much fake content and fake information, misleading information everywhere. So you can see a platform or an NGO that looks really good online, but you don't know what they're actually doing on the ground. So what we are trying to do at Global Sedekah is we play that role ourselves as a platform to screen the charity partners, the NGOs, the foundations and yayasans that we work with. And we are still trying to formulate the best way of screening. For example, we screen what is the percentage of contributions that is spent on operations. Right? We check that. We don't have a fixed number because every NGO is different. Right? So over time, we want to develop something that's more robust so that we can automatically screen this kind of applications. Right now, it's still very much manual because we're still learning the logic and the differences between different kinds of social entities in different countries also. Yeah, but I feel that there needs to be this role. This role needs to be played, and it's very, very critical. And I think this is the biggest gap in Islamic social finance right now that needs to be solved. Yeah. I think it'll be great to hear from the other panelists as well. I'm sure they have something to contribute to this topic. If you don't mind, Mr. Moderator.
Yeah. So I think we can have a discussion to, I think, Dr. Syed Farouk. So I think, Dr. Syed Farouk, you mentioned about the comprehensiveness of a global Islamic fintech report. You analyze based on the players and based on the readiness of the ecosystem. But how about if the ecosystem is tailored to MSMEs? So in your opinion, what are the key pillars in the ecosystem that need to be built in order to be in line with the concept of empowerment for MSMEs, for fintech to do?
Thank you very much, Pak Ginanjar. I think Brother Omar mentioned a few things, but the reason why, unfortunately, our economies look to the West is because of the infrastructural developments that have occurred there from the perspective of the enabling environment, right? And I'm sure my colleagues here, but particularly from Islamic Development Bank, understand what that means. We can talk day and night about the impact that Islamic finance is going to have, but I think the greater opportunity set is to get the enabling environment, ecosystem, or infrastructure to be developed in our markets. To the point of what happened in Indonesia, and it occurs everywhere in the Islamic world, is down to the challenges that we face in our countries, which has to do with the lack of institutional protection. And so we have a book called, I think I have it here, I'll just bring it to you, just 1 second. And I'm sure you read it. For those of you who haven't, this is the book, and I think you should read it. It's called Why Nations Fail. It is a very good book. It's instructive, not because we want our nations to fail, but what are the key things that determine what we need in our countries to enable economic prosperity. And in our context, believe it or not, it has to do with the political, and in every other context, it has to do with the political and economic institutions that we build. And in the context of SMEs, it's quite specific. You need specific enabling environments that enable institutions to collect data on SMEs, right? There could be, mandatory reporting requirements, which are far more robust in more of the developed economies in terms of what data they can collect. Then there's a layer of open data architecture that you need also, so to facilitate the extraction of information, whether that's from telecommunications, but also from financial services providers. So there are layers that you have to build that then facilitate the flow of funding. We can't assume that we can have appropriate Islamic finance when there is so much information asymmetry, and there is no way for what you call protection to occur for the funder, right? The only way to reduce that information asymmetry for the funder and therefore make Islamic or fair Islamic finance accessible is where there are either voluntary, but more specifically mandatory requirements to provide reporting and data that may enable decision makers to provide to have more clarity and continuous clarity. And that's where I think fintech is a tremendous opportunity, not only for Islamic finance, but just generally to enable data to come out of what you call lateral sources as opposed to direct sources. And I think that's the real promise of fintech, is creating and defining opportunities for data and extracting data that provide a picture of the individual and also of the institutions that are seeking to raise funding. Now we have a much larger data trail with far more telecommunications data available. There are many more data points, and really the opportunity for fintechs is to be able to scour and scrape some of that data and make sense of it. And that's where we've seen in a lot of majority markets, in many Muslim majority markets, where they've done a tremendous job in enabling for leapfrogging of financial services and inclusion, is by using telecoms, right? By using the data that's available there to make more appropriate decisions. Now, could we do that at a SME level? Absolutely, we could. And I think that's really the promise of fintech within this context. It could be, and I think within that context, everything that we've learned about Islamic fintech can eventuate when that data is there, and that's what we're really looking forward to.
Okay, thank you very much, Dr. Said. I think that's the key in terms of the ecosystem. We have to build the ecosystem in terms of the technology as well, right? In order to improve transparency, because all the risk are concentrated on the credit risk, which is transparency issue. I think the next question is to Mr. Said Hassan. You explained clearly about all the different methods to measure effectively and accurately the impact of the financing to the development and empowerment of MSMEs. So could you please not summarize, explain much deeper, like in 3 or 4 main factors, what are the 3 or 4 factors that need to be paid attention to for us, for industry players, to assess the impact of Islamic finance transaction on the MSMEs development, and what kind of capabilities of Islamic financial institution in order to implement and develop the proper product to make sure this. Thank you.
Thank you so much. Excellent questions. The importance of, you mentioned the question, if I can recap, is 3 or 4 factors to play an important role on how to be able to assess the impact. To be able to really access impact, we need to have the data on what is the value that the client is providing. Sorry, the MFI is providing. We know that most MFIs, they provide credit, right? Murabaha is determined to be a credit, Salam is determined to a credit. But if they are engaging in the value chain, and if they're engaging into the business, then they will generate value. So to be able to measure that value, we must go beyond collecting financial data. We must collect real sector data. So as a donor, as a regulator, we must understand, okay, fine, Bank of Indonesia or central banks, they know, okay, this microfinance institution or this bank, Islamic bank, they are on ongoing basis, they have their, their portfolio is fine, their repayment risk, their portfolio at risk are all okay. They monitor that. That's making sure that the financial institutions are sustainable. That is the first level of performance. If you remember, there's 3 levels of performance: financial, social, and impact. So the second level of performance is relating to social. You need to be able to find out whether the microfinance institutions, although they have 99.9% repayment rate, are they harming the clients? Are they taking tactics to force the clients to pay when they cannot pay? What are they providing products that make the clients go into further and further debt? We have to know that. We have to gather data on this. And this is a developing sector to make sure that, financial institutions do not cause harm. This is the second point of social performance, right? You now have, as a central bank, you now know, okay, the bank is sustainable. Now you know social performance, the bank is, or the microfinance institutions is not causing any harm. They put in place client protection principles. I think the guest lecturer, Iswari, was also mentioning about those client protection principles. This is all part of the MNE toolkit that we have incorporated. We have taken the best practice for those and put in practice in terms of Islamic finance. How do you do it from Murabah, Salam, and so based on global best practices in social performance. Now, the third element that we were mentioning is, how do you value add? How do you do good, right? So first performance is the financial institutions is performing, right? It's sustainable, which is what the central banks are doing. Second is they're making sure that they're not causing any harm. They're not doing any tactics that will make the clients even more poorer. This is do not do harm. Now, third element, which is not found in conventional microfinance, is doing good. How do you measure the value add generated? And this is the space that Islamic finance can really play a role. And to do that, you need to know the sector data. You need to know who are the suppliers. You need to know the prices. You need to have all this market data, which are often found in the contracts. But a lot of time, these contracts, which are signed, they are put into files and put into cupboards and never seen at all, right? Some of them may not even be in the core banking solutions. They are in the files because, oh, my Sharia auditor says that we must put in place the details of the purchase price and selling price. Okay, we put in place. But what that data, in the end, what's the use if you don't use it, right? So the data needs to be collected. And we have that as a basis. We need to collect that data. We need to go beyond that, make that into a rich collection of data, which we have put in place as a structure, a framework in the M&E toolkit. And then we will be able to demonstrate, create value, and generate impact. So those are the factors, essentially, to show the performance and the impact. The next one is on capability to implement and develop. Yes. So the capability to implement and develop is, it takes the, we mentioned about the ecosystem. Yes, definitely the ecosystem is needed. So we need to have the capacity building. Microfinance institutions are not used to doing business. Banks are not used to doing business. They're all bankers, right? They only want to give money and make sure that they get back the money with some form of return. And they need to go beyond that. And this is the capability that needs to be there. And this is the challenge, really. We need to change the mindset from being a financier to being a business person. And it's a different set of skills. But we need to be able to help them to gain those set of skills and to conduct business. The more the more business savvy they are, the more sustainable they will be, the more they will be able to generate value to the clients, and the more competitive they will be. One thing that I remember that when I was presenting in Washington, and I was giving this argument that, we are doing empowerment for the poor. And I was saying that, microfinance institutions must do this, they must engage the value chain. One of the audience members said, hey, yes, what you're doing is you're not just empowering the poor, you're actually empowering the financial institutions. Because previously, financial institutions, hands are tied. They can only provide loans and collect loans. This is their core function. Now, you are saying that they can do business. They can look at opportunities in new lines of financing, new lines of business to engage in the value chain. This is a whole different world for them. And we need to provide them the capacity to be able to do this and help them in terms of collecting data, providing them the right data to be able to make the right decisions. And this is what we are trying to do in terms of the monitoring and evaluations toolkit and indicators, and what I've explained during the seminar. Thank you.
Yeah, thank you. Thank you very much for the explanation, Mr. Hassan. So I think we can back to the question of participants. I think addressed to Dr. Said and also addressed to Mr. Hassan. The first one for Dr. Said: can we freely access the full data set of indices or indicators released by DINR standard? Because it's going to be very useful for researcher. And I think for Mr. Hassan, in your perspective as representative of Multilateral Development Bank, what are the opportunities and challenges in integrating technology and financing in empowering MSMEs? Please, Dr. Said and Mr. Hassan.
Thank you very much. Can we freely access the data and underlying indicators? The actual data sources are provided, but if you need the access to specific indicators, we can provide it for research purposes. If you just reach out to myself for a specific context, absolutely, we'd be happy to explore that. Yeah.
Yeah, thank you, Dr. Said. And for Mr. Hassan, based on your experience in Multilateral Development Bank.
Yes, from a donor perspective of a multilateral bank, we are trying to, our role is to try to help improve the performance of our partners. And this is our sovereign partners, which are the governments, and as well as our commercial partners, the banks, Islamic banks, microfinance institutions, and so on. So development of technology really is the next thing to do to help the client to integrate the right technologies into the way they do things. And I've explained, why we should do that, how the data can be so valuable. And data is valuable not just for financial institutions, but also for supervisory bodies like central banks to be able to understand the risks and the benefit generated by the financial institutions, which is very important, right? We want to make sure that the financial institutions are doing good and not causing any harm. And we need data to do that. And currently, the type of data that we are collecting are not sufficient. We have to collect more relevant data. So there is a huge opportunity to do this and to improve the way that we are doing things by collecting the right data and by using the data to help the clients or financial institutions to improve. Now, the challenge is really, does the financial institution, are they willing to have this shift to do more of this type of value chain engagement, to collect more data? This is the mindset shift that I was telling about, and this is a challenge that we have to get them to understand, to explain to them, yes, you're a bank, you have always been doing work as a bank, but now there is an opportunity, and you should look at it as an opportunity and not as a challenge or as a barrier that you have to do extra work to collect data and to analyze this data. We have to explain to them the benefits definitely outweigh the cost of doing so. So those are the challenges.
Thank you, Mr. Hasan. Can you have the question displayed, please? Yeah, I think to Dr. Said Farouk. Can you explain or give example of best practices or business model of Islamic finance in developing MSMEs? And the second one, how Islamic fintech can change the level of playing field for MSMEs in accessing financing and market? Yeah, please.
Thank you. Thank you. To Brother Said Hasan Assaghof's comments around the facilitative environment around, and all of the support that you can provide to SMEs. I think the one that really comes to mind is a company that our investment firm invested in several years back in Bangladesh. And the reason why it comes to mind, and mind you, they didn't set out to be an Islamic finance company. And I think that's our perhaps potential barrier to our way of thinking. They set out to see how they can, they initially set out to do something on ag tech, right? Agricultural tech or horticulture in households. But then they pivoted quite quickly to agri-tech financing. And the name of the company is called iFarmer. I would urge you to look it up. And of course, we urge them, but also they realize there's a market for Sharia compliant agricultural financing. And what they essentially do is something that's very powerful in most of our markets, and has done a tremendous job of facilitating access to finance in countries like Indonesia, Bangladesh, and elsewhere. But what they did was they harnessed capital from, very similar to what Ethis is doing in some contexts. They harnessed capital from global players, but also from the latent capital that's available within Bangladesh. And they took it from professionals working in financial institutions and in other organizations, multinationals. And they said, we're going to invest in farm produce or in farm livestock and on specific items. And what they do is they go directly to the farmers. They support the farmers. So farmers are essentially the most micro business in that sense. They go specifically to the farmers and say, don't worry about selling your commodity when it's produced in the market, or your livestock when it's grown into its full stage. We have a commitment to purchase it from you. We'll sell it for you on the market directly without the middleman, and then we'll also help you extract the greatest amount of production out of that land, or even the livestock. And so they essentially become a partner for all these farmers, where they have cut out the middleman and go directly to the market and sell at market prices. Because what happens to these farmers is that they obviously constrained for cash, and they take money either even advanced or later on from the middlemen who take the majority of the profits. And what they're doing here is that they're saying, we'll share that profit later on, but it'll be a much larger amount than what you get if you were to do this through middlemen. And so it's disintermediating markets. And I think that is really where the power of fintech lies, in disintermediating market, where middlemen are taking the chunk of the profits in between, and leaving the farmers who have a high information asymmetry, who have high illiteracy rates, with very little in terms of extracting the value of their hard work. And that's where I think there is a transformative potential, not only just of Islamic fintech, but just generally of fintech. But of course, from our perspective, why Islamic fintech is superior is not besides the contractual structures which we've covered, is because of the fairness of the underlying contract by which these farmers are engaged, right? And now, when we looked at the way that this fintech undertook those investments, what was really exciting and appealing to us was even their conventional contracts were fair, and far fairer than anything that they would ever get in the traditional market, right? And that's where we have to be also cognizant that, yes, we do want Sharia compliance, but we also have to see whether or not are we applying Sharia compliance in substance. Are we dealing with the maqasid of Sharia? Are we actually improving the circumstances for these farmers in a real, tangible way that they would not have access to? So thank you for letting me share that insight.
Thank you very much, Dr. Said. So I think we can have, because our time is limited, can we have a last question, please, from participants? Yeah, to Brother Umar, what do you think on how information technology can improve financial institution trust and management in developing MSMEs, and how the big data management can impact Islamic fintech in developing MSMEs? Yeah, and the second one is, how is the best framework in integrating innovation, digitalization, and Islamic fintech in developing SMEs, since the infrastructure has not well established yet, particularly in emerging economies? Please, Dr. Brother.
Okay, thank you, Pak. Thank you for the question. I guess it's a very big question, but a number of the points that we have been talking about today also relate to that question as well. Yeah. The second one is on big data and infrastructure. The first one, sorry, Pak, can you recap the first part of the first question?
Yeah. Can we have a display again for the, yeah, the first one is, what do you think how the IT, information technology, can improve trust and management for developing MSMEs, and how big data management can impact Islamic fintech? Yeah, the second one is about the best framework.
Yeah, okay.
The infrastructure is not well established yet.
All right, thank you. Yeah, I guess in general, the benefits of digitalization or implementation of new IT systems in traditionally run businesses, including fintech, the wider benefits are generally the same or similar, which is where you can automate a lot of processes, you can embed a lot of processes, and in the case of finance, governance and controls, and also compliance, right? So these parts can be embedded so that it automatically happens and it's not prone to or dependent on human intervention and human sometimes mistakes, right? Human error. So I think clearly that will help to create more trust, more alignment, and the way data is then shared from there also is very critical. So there's more transparency, there's more accountability between and with the stakeholders that are involved, right? Whether internal parties and or external parties like regulators and so on. So essentially, I guess one way to phrase it is that digitalization or implementing IT in finance helps to open up access to data, and that can be curated and organized in a way as required by the different stakeholders to create the trust, right? So I think that's very important. In the past, maybe this took a lot of time and effort and processes, but with technology and IT, this can be streamlined, automated, and can be done very regularly. And I think so far, from our experience in Indonesia, being a regulated entity under OJK there for P2P, I see a lot of focus and emphasis on this. Even compared to other regulators in other countries, we see the attention to detail and to the coordination component on the tech side is something that's very stressed on in Indonesia, which I think is very important. But of course, we are fintech, and that's a given. We have to be like that. That's part of our comparative advantage. But for all financial institutions in Indonesia and all, even I know Indonesia has a lot of more social-based finance institutions and organizations. Yeah, this is something that can bring and will bring, inshallah, immediate value, and in the context of trust, it can and will bring a lot of trust as well, right? So there's a lot more relationships that can be formed. Yeah. I guess the questions cover a wide range of points, and I'll focus maybe more on the data component, right? So the data component is very broad and very wide, and you need to have a good system that's able to pull out or extract the data, as well as process and utilize the data, and communicate with various different parties to present this data, right? So for MSME specifically, I believe what has always been a challenge is a lack of data, or a lack of knowledge on how to use data that maybe is already there, and or the collection of the data. And so at various different points, there's different gaps or challenges that we face. And so there needs to be, I guess, a holistic approach or focus from end to end in terms of the data collection and data processing and data use. Now, for this to come from the government or from major stakeholders within a country can be difficult, can take time, but I feel it's definitely necessary. But it does and definitely does happen in a more in pockets in the private sector, and I think that's very, very important as well, because the private sector typically is more nimble, more faster, and maybe even able to invest and take more risk at certain points in time, right? So that is something that is already happening, I believe, in Indonesia in pockets, in various circles, and a lot more. I think we just need to push it much harder, and for all the different stakeholders to realize that it requires contribution and coordination among many different players and stakeholders. And I think there are good fintechs already out there trying to do this. There are good players already trying to do this. The challenge typically that we tend to face is the buy-in or the participation of more traditional or traditional-minded institutions and organizations who may not be open to changing things too much, or it takes a lot of steps before they can approve certain kinds of changes or adjustments to the way they work and to be innovative, right? So that mismatch or that gap sometimes is very challenging, because for startups and fintechs, we need to move fast. If we move slow, the opportunity cost is very high, and we'd rather do something else, right? So this is something that maybe in terms of culture and cooperation between fintechs and technology providers and financial institutions who are still quite traditional, I think from top down and also in the middle, this awareness needs to be there, that there's a lot of benefit you can gain, but you must try to see how the organization can work in a way that is nimble and fast. And what we have seen is sometimes, for example, in Malaysia, as an example, let's say Bank Islam, although it's not, an MSME focused entity, they do have programs for MSMEs, but they are, a bank that serves the general market. They managed to roll out their digital bank, in a sense, separately or in parallel with their existing bank. So the existing bank is there, and they created a new department, a new division, so that it doesn't have to work within the constraints of the traditional bank, right? And then they managed to roll out a product. So I think that kind of approach is something that institutions should look into, so you can isolate some innovation activities within an area that's meant to be innovative, instead of going through the standard process to go all the way through all the different steps and all the different processes to get approval. Yeah.
Yeah, thank you, Brother Umar. Thank you, Dr. Said and Mr. Hassan. Considering the time, I think we have completed all our agenda, and we have to end this session since our time is very limited. I'm sure we had a very interesting discussion where all you guys experts have given their experience, opinions, and thoughts, and I do hope all of you can get valuable information, knowledge, and the most recent updates on how to improve MSME's asset and capabilities through digitalization and technology. So let me summarize the whole session by giving some take-home points. I think the first one is developing a strong role and participation of Islamic finance to empower MSMEs, and we need the innovation from practical, from regulation from the institution itself, including the product, instruments, tools to empower MSMEs, and how to support Islamic finance technology and digitalization, both through regulation and best practices to address MSMEs empowerment needs. So to get Allah's blessing, let's close this session by reciting Hamdalah. Alhamdulillahi Rabbil Alamin. On behalf of the organizers, Minister of Finance, in cooperation with Islamic Development Bank Group, Bank Indonesia, the Global Partnership for Financial Inclusion, GPFI, and its implementing partners. So we have United Nations Development Program, UNDP, the National Islamic Economic and Finance Committee, KNIKS, and the Indonesian Association of Islamic Economists. This conference is also supported by Faculty of Economic and Business, Bogor Agricultural University. I would like to thank the speakers and participants of this webinar conference for your presence and contribution today. So see you inshallah in our next series, which will be held on this afternoon at 1 until 3 p.m. Jakarta with the theme Islamic Finance Role, Improving Youth and Women Participation in MSMEs Development. So I think before we end, we have a photo session with all the speakers, because before I think it's still, Dr. Said is still not joining yet. Please.
Thank you, Dr. 𝙍𝙚𝙣𝙣 and all the panelists for giving us many insights and knowledge. And yes, we'd like to take another photo session with all the panelists and the discussion chair. And also, if possible, Ms. Isfari Sivalingam, would you please join us as well? Is it possible? All right, okay, I think it will be the four of you today. So on the count of 3, 3, 2, 1.
All right, thank you, panelists and chair. Now, before we move on to the next agenda, it is time to take a break. and you may have your lunch and zuhur prayer. Let's convene again at 1:30 p.m. Jakarta time.
Enjoy the break and see you again.
Assalamualaikum warahmatullahi wabarakatuh.
Good afternoon and welcome back to the 6th Annual Islamic Finance Conference, Islamic Finance Role in MSMEs Empowerment, Boosting Capability and Fostering Inclusiveness for Sustainable Future.
Yeah, and we hope everyone enjoyed their short break and has come back to Zoom or YouTube to continue the conference. And we are now entering the third and final panel discussion carrying the topic of Islamic finance role, improving youth and women participation in MSMEs, development with the experts. We invite you to join the discussion as well by submitting your comments, thoughts, and questions in the link fiscal.id/6IFC 2022, which the panelists will then address during the Q&A session. And please state your name, your institution, and to whom the question is addressed to, followed by your question.
And this session will be moderated by the Technical Analyst, Innovative and Sustainable Finance of UNDP, Mr. 𝙍𝙬𝙧 Kalabuana. Mr. 𝙍𝙬𝙧 has spent the majority of his professional life in Islamic finance since 2009. Prior to joining UNDP Innovative Financing Lab, he worked in the research division of the Indonesia Financial Services Authority's Islamic Banking Department and also assisted Dompet Duafa in coordinating social and development programs. He has also actively contributed to other Islamic finance issues such as fintech, insurance, investment, and so on, and also shared his perspectives on social media platforms.
And the panelists for this session are, the first one is Senior Advisor for PE Finance and Funds, UNDP Financial Sector Hub, Mr. Artak Robert Melkonyan. Regional Research Lead Southeast Asia, Women's World Banking, Ms. Agnes Salianti, and CEO of Alami Group, Mr. 𝙒𝙤𝙣𝙣.
All right, now to celebrate this moment, please allow us to invite all the panelists and the discussion chair up to the virtual stage to take a picture together. Let us invite Mr. 𝙍𝙬𝙧 Kalabuana, Mr. Artak Robert Melkonyan, Ms. Agnes Salianti, and Mr. 𝙒𝙤𝙣𝙣 for the group photo session.
Yeah. On the count of 3, 3, 2, 1. Thank you, panelists and chair.
Right, and now I would like to hand over the session to Mr. 𝙍𝙬𝙧 Kalabuana. To Mr. 𝙍𝙬𝙧, the time is yours.
Thank you so much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, good evening, everyone, wherever you are, distinguished participants, also ladies and gentlemen. I hope everyone is keeping well and with full of positive energy. On behalf of the organizing committee, let me extend our warm welcome to the 6th Annual Islamic Finance Conference 2022, the role of Islamic finance in micro, small, and medium enterprises, MSMEs empowerment, boosting capability and inclusiveness for sustainable future. My name is 𝙍𝙬𝙧 Kalabuana from the United Nations Development Program, UNDP, and now I'm your discussion chair for the third session on improving youth and women participation in MSMEs development. By means of the introduction of the panel team, we already have here on the stage, a virtual stage, Bapak Artak Robert Melkonyan, a senior advisor for PE Finance and Funds, UNDP Financial Sector Hub. Welcome to the virtual stage, Pak Artak. I understand that you're joining perhaps from Bangkok or somewhere else in Europe. Thank you very much. I think it's been 2 or 3 years since our last meeting in Jakarta. And the next is Ibu Agnes Salianti, Regional Research Lead, Southeast Asia Women's World Banking. Hello, good afternoon, Ibu Agnes. Nice to meet you, and I can't wait to hear any longer to learn more about women's perspective on the MSME. And the last, but of course not the least, Bapak 𝙒𝙤𝙣𝙣, the CEO of Alami. Nice meeting you, Pak 𝙒𝙤𝙣, again and again in Islamic finance circles in Indonesia and also a global forum. This session will elaborate more on the state of young and women MSMEs entrepreneurs especially in the economy, about their roles, their challenges, and also contribution. And we will also be discussing about the successful framework in developing youth and women entrepreneurs and how Islamic financing and instrument potential can support the MSMEs, especially women and youth. But before we deep dive into each speaker, let's start with knowing the fact that the younger and youngest generation population are right now, today, the key drivers for Islamic economic growth. Let's say economic growth in general, especially for Indonesia, including Islamic finance, halal industry, MSMEs. In 2017, 5 years back, Bapak dan Ibu, the median age of the rest of the world is 32 years old. My point of saying this is that this world is dominated by the young generation, whatever the definition of young generation would be. But if we put it in the context of halal products or halal industry globally, which is not only for Muslim, in terms of production or export, we know that despite being the biggest halal product exporter among the OIC member countries, I mean Indonesia, and consistently topping the halal food and beverage consumption, Indonesia only contribute to 3% or 7.6 billion USD to the halal export global share, far behind Brazil, which is not Muslim majority country. So we are not talking about only for Muslim, we're talking about universal values and inclusion, and maximizing the halal export by empowering MSMEs at potentially up to 11 billion USD per year to GDP of Indonesia, and also increases employment by up to 300,000 jobs. Amazing. So unlocking this potential will make MSMEs the global income, global economic engine, both for production and also for consumption. So to speak, that's why empowering youth and women is one of the key efforts. But however, Bapak dan Ibu, there are many cliche problem or issue that rooting in the economic and financing sector, which is the lack of access to finance. Compared to company, startup, MSMEs are less capable to attract financing and loan from bank, from financial institution at the early stage of entrepreneurial life cycle. So let's hear from our speakers, and for participants and audience who are willing to ask questions, you can simply drop your question in the link Slido in the chat box, and please mention also to whom you direct your questions. The first presenter will be Pak Artak Robert Melkonian. In UNDP, Pak Artak currently leads a dedicated team that specializes in innovative impact finance to address the SDGs. Pak Artak, you have 10 to 15 minutes at maximum. Time is on your side. Pak, please. Thank you. I think you're still on mute, Pak Artak.
Oh, thank you, Gregat. Let me greet you and thank you for inviting me to be part of this amazing event. Youth and women empowerment was amongst the major issues that UNDP always looked at, and I personally was involved in by supporting different frameworks to implement it. One question, Gregat, regarding the slide shares, it will come as I speak, or I should share the screen?
I think the organizer will be sharing screen, Pak.
So, okay.
So we can continue speaking.
Okay, good. So, perfect. So from the first aspect, first of all, I think we need to understand what are the SMEs in Indonesia, what are the major parameters and major challenges and around it, and when we can talk about the frameworks, effective frameworks. So, MSMEs, as in every other countries, they are a very significant contributor to the economic development of the country. In case of Indonesia, we speak about employment generation, reducing income inequalities, and we know that MSMEs contribute to 61% of the country's GDP. So it's a pretty significant contribution, and probably Indonesia is one of the leading countries from that perspective if we compare it with the others, right? 99.9% of enterprises in Indonesia qualified as MSMEs. Now, an interesting aspect is that 97% of the workforce is engaged in MSMEs. So that's another interesting fact. Despite that contributing to 61%, if we take out big companies, so 97% of population is involved in this type of activity. Now, there are some traditional sectors that MSMEs are specialized in. Those are mostly related to wholesale and retail trade. There are some others that we would be talking about, but what we have seen in the recent years is that technology-based startups, start emerging and taking a bigger role in the overall Indonesian economy, and their share in the overall sort of community of MSMEs is growing. Now let's go to the next slide, which actually talks about youth and women aspect in the context of MSMEs. So an interesting fact, over 50% of MSMEs are owned by women. This is due to the fact that there are many micro enterprises which are run by women, but this is very interesting and very sort of impressive share of involvement women into this type of in this sector of the economy. From the youth perspective, we know that almost 24% of population in Indonesia is youth. So it's basically 1/4 of people would be qualified as youth. 20% of youth which were employed have been sort of positioned as entrepreneurs. That means that they are leading those MSMEs. So that's another interesting aspect, another dimension to look at that. So again, signifying that this is how youth is involved in MSMEs. And again, we know that 50% of all those entrepreneurs were specialized in retail, car repair, agriculture, forestry, and fishery sector. So these are like those main areas which are driven by youth entrepreneurs. Now, some not that pleasant information about the effect of pandemic that we had on youth and youth from MSMEs. So based on our own research by UNDP, we know that 79% of businesses which are run by youth had a negative impact, and 21% was completely shut down during those crisis times. We know that, and I think that is sort of a common fact, that COVID had a sort of a significant impact on the overall microeconomic situation, level of employment, and that is also affecting the youth unemployment aspect. So it has grown from 13 to 15% between in those years of the pandemic. Now, from the again, based on some of the researches that were done through our programs, I'm going to talk about a bit later, we also sort of elaborated on how and what are those entry points for which we can support youth entrepreneurship. So I think we will discuss that in a detail later on, but I will mention few of them here. Availability of capital at different stages of the enterprise development, not only at the sort of mature stages, but at the growth stage, at the startup stage, etc. The diverse type of sources for the funding of enterprises, sort of having capital providers, investors being a bit more inclusive, meaning availing their money to young entrepreneurs and startups based on their needs in different parts of the country. So number of increasing the number of intermediary institutions which help the entrepreneurs to access the investors and the other capital sources. Financial literacy, incentives to the investors, and again, quite relevant to the topic of today's conference is the specific Sharia-based grant schemes that could be that are non-interest bearing and could be very sort of useful for the youth programs, as well as other type of government sort of supported capital schemes to be availed not only at national but also at the regional level. We in UNDP, we based on those researches, based on our understanding of what the ecosystem requires and what are our own capabilities, we have two major, I would say, programmatic frameworks to support youth and women entrepreneurship. One is very sort of focused on youth program, Youth Collab, which is actually a program running in the region, not only in Indonesia, which empowers and invests in youth so that we sort of accelerate implementation and contribute to achieving sustainable development goals through social innovation, leadership initiatives, and entrepreneurship. The second one is another initiative called Impact Venture Accelerators, which again, we are implementing those programs globally. In this region, first time we did it in Indonesia, by the way. So this is about supporting what we call impact ventures that provide systemic and scalable solutions that target SDGs through different innovative business models, technologies. Many of those ventures, many of our accelerators are entirely focused on youth and women empowerment. I'll be a bit more specific about what Youth Collab does. So there are several types of offerings. Now, one set of offerings refer to the overall ecosystem research and support diagnostics, sort of coming up with different knowledge products and helping the systemic sort of transformation of the area related to youth engagement and employment. The second part of offerings refer to the providing different sort of financing solutions, bringing together youth to talk about the development, and the other part is more specific about programs to support youth on specific sort of venture implementations. So far, Youth Collab in Indonesia has supported over 150 youth-led social enterprises with 17,000 beneficiaries. In Indonesia, what Youth Collab has done, there have been three quite focused researches on youth entrepreneurship related ecosystem, diagnostics happening at different years at different times, as well as engagement of youth in targeting the green economy. There had been very specific program for customized program for Indonesia, Ideathon Asia, which is more like a crowdsourcing sort of a platform to bring in business ideas and aspirations, so that again we try to help those aspirations become realities, converting that into ventures, specific enterprises, again targeting overall sustainable development goal purposes, targets. So Youth Collab is another program, Youth Collab Bootcamp is another program which already works with social entrepreneurs which have already businesses. So it's a bit more mature stages to support youth entrepreneurship. And again, so it's helping the businesses become more oriented towards social, environmental, and economic challenges, and again, goals within the context of national development, sustainable development goals. And national dialogue is more a convening type of forum to bring in youth together for a policy dialogue between the stakeholders within the ecosystem, the government, etc. The other format that I've mentioned is impact venture accelerators. So these are actually it is a combination between business acceleration programs and a very robust effort on SDG impact alignment, scaling, measurement, and management. So basically, we combine in these programs both business acceleration and impact part into one sort of framework with the purpose of scaling technology, business, and impact models, and to implement a systemic and transformative changes within the system, within the ecosystem. Now, impact venture accelerators, they have different components. It might include just hackathons, some sort of competitions, where sort of boot camps, pre-accelerator programs, fully fledged accelerators, and followed up with an extensive support. Now, we were happy to implement the first impact venture accelerator in Indonesia. We partnered for that one with 500 global, 500 startups, supporting 9 ventures, and amongst which were both women-run and the ventures which were targeting women empowerment, women health, or youth employment, such as the 𝙒𝙤𝙨𝙾𝙾. And it was a very successful program. So within just less a year, 9 ventures were able to raise over $12 million in investments. Another program which we have implemented jointly with Collab, basically we combined 2 frameworks here, and in cooperation with YCAP Ventures, Moonshot Ventures, Creatella, Indonesia Women Empowerment Fund, UN Women. So there have been many participants there. It was entirely fully women empowerment focused pre-accelerator in 2021, where we hosted 24 ventures with over 50 participants, 30 mentors. Again, we were able to raise over $8 million. Again, the pre-accelerators are shorter programs. They are much implemented within much shorter period than the accelerators, but they produce very good results because, again, we are able to work with larger number of ventures and produce sort of results faster than in case of the accelerators. I'll stop here and welcome the questions, if there are any, to elaborate on specific examples, if you wish, or on specific other perspective frameworks that we can propose to support youth and women entrepreneurship.
Yeah, thank you so much, Pak Artak, for the wonderful presentation and delivery on the Youth Collab especially. So I take note on the 3 key points that UNDP has been doing in developing the youth and women MSMEs. The first one is regarding the youth leadership. In this case, we cover women and men. And then the second one, social innovation. And the third one is the entrepreneurship spirit as well. So I have one question, Pak Artak. Perhaps you can elaborate more on the successful Youth Collab since 3 or 4 years ago, and then follow up with the Impact Venture Accelerator. So basically, what kind of critical factors for this kind of program that you can share with audience here? Because I can see that it is either bottom-up approach and also top-down approach, since you mentioned about the national dialogue. So there is also policy empowerment in this case.
I think, thank you very much for your question. I think to be successful, we really need to target at several levels, right? For example, Youth Collab even builds its program on micro, meso, and macro level. Sort of a policy level has to be there to create a proper environment for developing the ecosystem, having policy dialogue, having some sort of a policy measures, facilitating the development of the entrepreneurship, policies which would result in creating specific frameworks. It might be related to advocacy, capacity building. It might be related to the financial schemes, etc. So all this happens at the policy level. At the same time, we should not ignore I would say, specific engagements and creating the facilities to work with large number of ventures, and when to actually work with those ventures, work with those youth representatives, youth or women entrepreneurs, individually, to handhold them, to mentor them, to sort of formulate and format their ideas, convert the ideas into the enterprises, and when help those enterprises to grow up. So it has to happen at all three levels. Like, again, the Youth Collab is nicely built to address those aspects. In terms of the accelerators, it's more like again, it's a bottom-up approach, which is specifically focused on targeting two aspects. One is the impact aspect. The second is the business aspect. And here, what is important, and this was one of those prerequisites for the success, is that when we speak about women in entrepreneurship, we look at enterprises which are led by women, owned by women, where significant management is done by women, but also, not only that, the enterprises which might be led by men, but are addressing significantly the women empowerment aspect. And it might be that empowerment might be through health-related products, through financial services, through educational services, etc. So the same is with youth. When we talk about youth empowerment, that has to relate not only to having youth engaged in the overall activity, but the activity itself is targeting the empowerment aspect. And for that, what is important from our perspective as UNDP is to do what we call an impact targeting, impact measurement, and impact monitoring, whether the enterprise by itself is targeting impact as one of its sort of entrepreneurial or corporate targets. I'll stop here.
All right. Thank you so much, Pak Atak. I take note as well on the anticipation to not excluding men when we're focusing on women, also to not excluding senior when we're focusing on youth. Thank you so much, Pak Atak. We'll get back to you later on. So we move on right now to Ibu Agnes Salianti. Ibu Agnes is the research lead for women's food banking. She leads research activities around digital financial services, policy advocacy, and various research to promote financial inclusion for women. And Bu Agnes will be speaking on equal participation for women. So, Bu Agnes, it is an honor for having you to represent women. So perhaps we can also cover how women empowerment can also impact both women and men. And you have the same 15 minutes at maximum, Bu. I hand it over to you. Bu Agnes, please. Thank you.
Okay, thank you so much, Gregat, for the time, and thank you for AIFC committee to invite us here. I'm Agnes Salianti. I'm the research lead for Southeast Asia regions of Women's Food Banking. I'm here to talk about ways we have learned and tested to improve women's entrepreneurs to participate equally in the MSME development, particularly in the micro segments. Committee team, please project the slides. Okay, can you go next? Yes, thank you. First, let's talk about financial inclusion. So what is it? It's about people who can access formal financial products and services. And based on the 2021 Global Findex result, globally, there are 750 million women are still excluded. It means that 742 million women. Nevertheless, our country has made significant strides in women's financial inclusion from 27% in 2014 to 52% in 2021. But in terms of the size of the populations of excluded women, Indonesia ranks as 4th highest in the world, with about 49 million women remain outside the financial system. Well, no nations can succeed in modern world when nearly half of its population is denied. Without even a formal financial accounts in their own names, they will lack the basic services that most of us takes for granted, like secure ways to save money, pay bills, and get loans. So in response to the continued gap, Indonesian government, I believe, as mentioned by SNKI, has set goals to include 90% of adult populations in the financial system by 2024, with a special emphasis on microcredit to catalyze MSMEs, especially those owned by women. So this brings us the context of why should we bother? Why both MSMEs and women is such an important segment in Indonesia. Next, please. Thank you. Let's talk about MSME first. Our MSMEs contribute more than 61% of Indonesian total revenues. These segments absorb around 97% of the country's domestic employment, and around 99% of existing business today actually falls in the MSMEs category. So at the same time, 64% of Indonesian MSME entrepreneurs are women. So in our case, empowering MSMEs actually empowers women. And then when we talk about what business that women MSME is mostly doing, well, the Global Entrepreneurs Data Report in 2021 shows that the majority do retail business. Their social demographic profiles also shows that most of them are doing business during their productive and mature age, and most of them are secondary school graduates. Next, please. Committee, can you go next, please? Thank you. So understanding the importance of MSMEs, we recognize tremendous efforts so far to improve infrastructures as well as the inclusive ecosystem, like simplifying and harmonizing rules for applying business license through the OSS system and backed up with omnibus law, or promoting public-private partnerships on local, regional, as well as global level, and utilizing those partnerships to leverage MSMEs capacity, such as in providing or promoting support to apply for halal certifications to support halal industry. And so initiatives also come up from other private institutions, such as when fintech companies not only provide accessible financial products for most urban and semi-urban MSMEs, but also support them with capacity building on digital and financial literacy. And I think Mas Dima would be the one who has the capable to explain more about this. But the question is, are this program and intervention already include gender lens perspective, particularly when 64% of MSMEs customers are women? Have we tried to identify them, understanding their needs, their wants, as well as challenge and pain points before when on designing particular programs, products, or services for these women? Next, please. I think various research has tried to provide insights and understanding the characteristics of MSMEs. In addition, Women's World Banking team also have tried to explore the bottom pyramid of our MSMEs, which is the ultra micro segments, where it accounts as the majority within the micro segments. So by using persona analysis, we try to identify them based on their behavior in managing their daily business, financial as well as digital utilizations. And thus we came up with 3 particular woman profiles. They are the necessity, where this type are very much operate business and conduct transactions in a such traditional and manual way. The second one is the stable, who are still running business and financial transactions traditionally, but they are more open to start trying digital platform for business operations. However, financial transactions are still centered on cash-based transactions. For example, these type of MSMEs start to onboard the e-commerce platform, but still prefer to do cash on delivery atau COD over a fully digital financial transactions. The last one is the growth-oriented, as the one who are more advanced in doing transactions through e-commerce platform or conducting financial transactions digitally. Next one. Additionally, our finding on saving behavior suggests that they actually have the ability to save, yet the saving amounts is quite limited. This is due to the situations where they typically prioritize short-term expenditure and daily needs, hence struggle with the long-term planning. These women also prefer saving money in cash over other methods, since they perceive that it is easier for them to access money for business and daily needs, requiring less time, less financial cost, rather than they have to travel to branch office to do deposits or withdrawal. However, how they operate and manage their financial situations really impact their ability to be financially resilient. So when we talk about resilient, we talk about ability to meet regular expenses every month and surviving unexpected financial hits. In our last research, we tried to ask if these entrepreneurs were to lose their income, how long their money can help them to survive. And we found that at a majority, their money can only help them to survive up to 1 month in meeting their daily expenses. So this is actually a striking fact, showing that there are huge room of improvement for supporting these MSMEs, particularly the micro entrepreneurs. During economic shocks, having a buffer in the form of savings to protect MSME from financial problems or to help them to continue their business in the face of uncertainty is as important as ensuring financial access. Next one. Thank you. We also found that the access to smartphone is not a challenge for these micro entrepreneurs. Referring to social media usage, WhatsApp, Facebook, and Instagram are the most used social media apps they likely to engage with. And mostly they use it for leisure and entertainment. Further, when we ask whether it is used for business purposes, out of those who use any social media apps, apparently the number of samples immediately dwindled. Meanwhile, referring to digital financial transactions, mobile phone usage are still limited in this case. The majority only use ATMs for withdrawal or money transfer. Some even may prefer to go to branchless banking agents nearby their homes or business premises. Next, please. So going back to women, what women need actually? Beyond capital needs, these entrepreneurs cite the need for assistance in building their business capacity, increasing the quality of information on which they make decisions, improving access to market, and proceeding with formalizations of their business. However, to understand which program is most suitable for each user's need, the persona analysis can be a useful tool to delve into gap that exists between product and program designs with the pain points, challenges, and need of the user segments, which are the women. Hence, this way, product and program designs will be more suitable for women customers' needs. And reflecting on our recent experience in facing pandemic, we should start to see that ownership and usage of savings and asset protections are essential for them. With a savings account, these MSMEs can mitigate risk, as well as preparing business futures. There is a room of potential collaborations between government institutions and financial providers to help opening a safe and convenient saving tools for these MSMEs, particularly the unbanked and underbanked. The second one is talking about asset protections. Most MSMEs business continuations are highly depend on the sole caretaker of its owner, which means risk posed to the owners such as illness, accident, or death actually directly risk to their business as well, causing them to sell either their assets or business closures. Additionally, when we talk about women, there are certain stages of their life whose health are also on risk. For example, when they go through pregnancy. Hence, there is an opportunity to develop microinsurance products, such as either it's life insurance or health insurance that can be linked to their MSMEs financing products. What's important for MSMEs, particularly women in this case, is that micropreneurs particularly don't have much time to explore and map relevant information for this business. Women particularly, their daily time are fully occupied. Either they nurture their family while simultaneously running their business. And our research found that when deciding on a particular product to test, they would prefer to hear testimonies from people they know closely. Thus, trusted contact points will be a preferred source of information when on board to financial products. So what I can say here is, in a high-level summary, financing isn't the only solutions for women being empowered. Actually, it takes more than financing access to empower women and promote sustainable, inclusive economic growth. Next, please. Going back to the finding that there are less use case for micro entrepreneurs in digital financial usage, some of our key learnings related to women's and digital access that we did in Indonesia, Cambodia, India, Mexico, and Bangladesh, we have learned that there are four main principles in designing the suitable programs or products to build digital financial capabilities. The questions we need to ask before designing would be around, first, who are actually we are targeting? Meaning, do we already understand who are they, their characteristic and profile, Second one is, what objective do you want to get? What objectives do you want to target from our users? Is it financial literacy? Is it digital literacy? Is it digital financial literacy? Or is it digital financial capability? Each of these objectives deserve a very granular topic and method to deliver. The third one is understanding the needs, challenges, and pain points, and which channels are actually most preferred by these MSMEs, particularly women. And the last one is, in terms of program on product design, it must be designed as a whole, an end-to-end process. So not only just onboarding these MSMEs, but also to ensure that along their customer journey, we help them to be more confident and able to access and use to its potential benefits. Next one. Women, both as customers and decision makers, are the center of attention of women's banking. Because we know that when we have more women in economic sectors, more women having access to finance, and more of them being confident in using financial products and services, it then also leads to stronger MSMEs ecosystem, as well as in providers' institutions. So again, going back to the term empowering women, we need to understand a more realistic yet measurable indicators. Understanding what women need, what have been their pain points for being confident in building their financial resilience, or in building their economic participations and bargaining power, and have a good digital and financial knowledge and capability. If you want to know about this and you have the data already, and you wish to understand is there any gender gap or gender bias, you need to go back to what your data tells you about. Otherwise, you always end up in this general neutral practice and design. Bank, fintechs, market drivers, and government also should view this 49 million unbanked women not as a charity case, but as a business opportunity, a potential new market of business owners, managers of household, purchaser of financial products and services. That's the market player that may have not captured yet. If you don't do it, someone else will do, sooner or later. Next one. Thank you. Last one is, I'm going to talk about what have been our initiatives to empower women. As we focus on MSMEs and implications on digital as enabler to bring evidence-based discussions, our work have been around women's economic empowerment and women financial inclusions, such as we've done research around financial resilience and digital adoptions, working together with National Investment Agency or Pusat Investasi Pemerintah. We also have helped several Himbara banks to develop product solutions to motivate their women G2P beneficiaries to build their financial resilience through their accumulated savings as their future assets. Last one is, among the other, obviously, we conduct women economic empowerment projects within the unbanked and underbanked segments in Indonesia, Cambodia, India, Mexico, and as well as Africa to understand better on this woman's day-to-day life portrait. But we're not stopping there. We bring our market insights to our partners coming from banks, MFI, fintechs, government institutions, which happens to be the program owners, and wish to strengthen and share the same spirit in empowering women. We also help advocating regulators and related authorities to build a secure and prosperous future for women, their employees, as well as their communities. Hence, a coordinated efforts are needed where public, private sectors, civil society, bilateral, multilateral organizations should put focus on this, understanding the value of women empowerment. So recently, we launched our local coalitions called as the Women Digital Financial Inclusions Advocacy Hub, or WDFI, together with the United Nations Capital Development Fund. It is a form of coalitions among public sectors, private institutions, civil society, to together drive changes and actions in the local level to increase women's digital financial inclusions. All in all, it's a collective actions to bring diverse sets of stakeholders together. If you recall our known broomsticks philosophy or philosophy sapu lidi, when only one has little power, but once tied together, it will create a whole force. If alone produce something good, accumulated output is definitely better. So in my final words, we have big homework we all need to work on. But what's exciting about this is there is something you can do to move the needle on women's economic empowerment and financial inclusion, starting from your own little circle. Thank you. That's all, and I return the stage to you, Gregat.
Thank you so much, Bu Agnes, and thank you for bringing the broomstick philosophy. That's very exciting. And I take note on the one irony that I think it is very important to all of us about a bit women exclusion. Also, the fact that women own more business than men. That's mind-blowing, actually. Correct me if I'm wrong. But I think it's also similar to the data that was mentioned by Pak Artak earlier. So, Bu, I'm interested in the WEE framework, Women Economic Empowerment Framework. Since you mentioned as well about the indicator, is there any evidence-based program that has been implemented, perhaps adopted by the government using the WEE framework, Bu? If you can share with us, perhaps the innovation or the tools or the business model. Thank you, Bu.
Thank you, Gregat. So when we talk about women economic empowerment framework, there are 4 main indicators. Committee, can you go back to my slide? I think it's page, I forgot, 9. Well, simultaneously, I can tell you about that. Well, several methods we try to test it to help women's MSMEs to start business is, again, opening access to formal financial account under their own names, ensure this woman to be able to access formal, non-predatory financing. Thus, to help opening those access in the bottom layers, I think government of Indonesia have distributed subsidized loan for this woman. Some access it through a group lending format. When 10 to 15 women gather up, they are being assessed, and then when they are eligible, they are allowed to get a disbursed loan. I think it's around 4 to 5 million, and this is some efforts that government has made so far, and I think various institutions also has done that, like Amarta and other companies. Other than providing access to financing, ensuring financial capability in building up savings, assets, and digital capability to understand digital technology should be able to help them accessing a wider market base are as important as getting the financing access. So what Women's World Banking has done so far, like for example, our recent work with several Himbara banks, we tried to build up a product solutions that could acquire women G2P beneficiaries. In our case, it was program Keluarga Harapan, where we tried to give them confidence, give them tutorial, give them solutions of training to ensure that you can use your formal financial account to save, and you can monitor that savings. You can also accumulate that savings, not in a very high amount, but also you can also do that in a very small amount. Thus, it gives them confidence. It gives them cognitive perceptions that, oh, I can save. I have the ability to save. I can earn my money. I can accumulate my assets. I can have this prosperous futures. That is something that we want to build up. A knowledge, self-confidence, as well as digital financial and digital literacy. That's some of our interventions so far.
Thank you so much, Bu Agnes. Actually, there are a lot of questions that I would like to ask, but we will be returning to you, Bu. If I can mention the 4 points, I think they are access, control, participation, and benefits for women. So now we are moving to Pak Dima. Pak Dima Jani is the founder and CEO of Islamic Group, the world's largest Sharia compliant SME lending platform turned Islamic challenger bank. And we know that Islamic has been growing tremendously, Pak Dima, with all positive impact on society and also to Indonesia as a country. So Pak Dima, you have maximum at 15 minutes. Pak Dima, the time is yours.
Thank you, Mas Gregat. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I think the slide will pop up right soon enough. All right, cool. So I'm very pleased to be invited in this conference, and I'm quite happy that I come after Ibu Agnes, because she just highlighted there was just so many problems that the women entrepreneurs are facing, and we're here trying to come up with a small step to try to contribute towards solving that problem. So some of the problems that being shared, first, it's very hassling to go to the branch and dealing with banks. Mostly, that's why a lot of banks are going for digitalization. Also, low literacy, and for any small businesses, especially youth, is the lack of mentorship, a lack of access to finance, as well as access to the market. So we're just trying to provide a small step to provide the ultimate solution to all of this problem. Now, the interesting question is, why Sharia? Okay, we can go next. Right. So if you look at this number, the growth of halal financial industry, it's 3.1 CAGR, albeit from a low base. This is the fastest growing religion in the world, first of all, and what comes with it is obviously the fastest growing businesses or verticals related to this specific segment, and finance is one industry that is very core to lifestyle. So hence the financial growth of the Islamic asset is very fast globally. And in Southeast Asia itself, we have probably around 300 million Muslims, and I guess a lot of it being contributed by Indonesia, having around 231 million Muslims. But I just met with a fintech association from the Philippines, and they said like it is growing very fast there as well, and obviously Malaysia, Brunei, and even Thailand. So as a region, Southeast Asia is very interesting, especially the hidden gem of the halal industry. And having said that, the penetration has been very small. Overall, for MSMEs, have about $165 billion financing gap. And obviously on Islamic finance space, the room is even bigger to fill. But having said that, all of these promising data points, at the end of the day, Sharia finance is just constituting the highest form of governments in conducting businesses to ensure fairness to all of the parties involved. So on the other hand, it sounds to me like the principles of ESG, or where all of the, I would say, businesses or financial industry is going for. So really, we think that the business model is very much aligned, the principles are aligned, and especially when we're talking about giving back to the society rather than maximizing the profit. So the triple helix is really at the core of Islamic finance principles. Next slide, sorry. Okay, so this is just a quick overview of the journey of Alami, as being a youth-run startups or small businesses. So we started off in 2018 from humble beginnings, and Alhamdulillah, Allah made it easy. We are, I would say, one of the leading brand when it comes to Islamic fintech globally. That culminates in several awards that we've taken. We're the only fintech from Asia Pacific that's being featured in the Fast Company as one of the world-changing ideas from Asia Pacific, as well as other awards from the Asset Global Islamic Finance Award, as well as HR Asia as the best place to work in recently, Alhamdulillah. So in terms of the businesses, we are starting from peer-to-peer lending platform, helping for productive lending to SMEs and micro entrepreneurs. And then we expand to an Islamic digital banking verticals. And we're also come up with several initiatives that I will talk more a bit later. Next slide. Now, this is our core businesses. We have the peer-to-peer app where you can actually increase your wealth, especially for women. And I have a slide about the breakdown of our funders between the men and women. You can increase your wealth while helping others, right? So because unlike many other investment platform that you put into a financial asset, this actually goes directly to the SMEs. So it could be from consumer to SMEs, could be from SME to SME. So The principle is to be the bridge in between and helping SMEs to fund their working capital. And the second business line that we have is the Hijrah Bank. So this is the digital bank in Indonesia, full Sharia compliance. And this is really, if you look at the box feature on the right, bottom right picture, it's really to teach how people should save, right? So before, I think Ibu Agnes mentioned that they have the ability to save, but they probably rare to save, only save like a small amount. And typically, if there's a short-term needs, they just take it, although it might not as urgent. But with these boxes features, they can actually envision, like for example, they want to save to go to Umrah, right? So they always be reminded on their initial objectives, and they would be behavioral wise, it could be better to shape and fulfill their savings. So this is like some of the things that I think technology and new business models can bring and help the community. Next slide. So in addition to our two business lines, we're not only focusing on the financial inclusion, which is represented by the peer-to-peer and the digital bank. We're also focusing on increasing the financial literacy, especially here the Islamic finance literacy. The problem with the adoption of Islamic finance is that the Islamic financial literacy in Indonesia is still very low. We're seeing a growing effort to increase the literacy thanks to our religious leaders, the asatis. But still, we need to work together to increase the literacy so that the industry can flourish, because at the end of the day, it's good for everyone. So we come up with Arkham Accelerator. So this is an accelerator program that not only teaching how to scale up their business, connect them to the right mentors and potential access of capital, but also to help them how to do businesses in an Islamic way, you know, according to the Sharia principles, etc. So this is, we haven't seen any other accelerator having this type of curriculum, and it has been widely successful. We have more than 4,000 participants, small businesses joining this accelerator program. And the other one is Alami Institute. This is the think tank institution that we come up with report, sustainability report, Islamic finance report, working together with the regulators, the universities, to really help to increase the financial literacy in a fun and easy to comprehend way. Next slide. This is our footprint in Indonesia. Alhamdulillah, we have presence in all of the provinces and a lot of cities, 482 cities in Indonesia. We have disbursed now around 3.5 trillion rupiah with 100% TKB90 or 0% default rate. I think this is something that we want to showcase that the Islamic financial industry actually can do it, right? We can move very fast. This is actually faster than the industry, the non-Islamic, but we can keep the quality of our financing, and how we select the borrowers and how we can educate the borrowers is actually, you know, very professionally run. Next slide. So another thing that, although like we have disbursed 3.5 trillion rupiah or about $220 million US, at the end of the day, it's just a numbers. We want to be focused on what that numbers is actually bring to our stakeholders. So we want to focus on impact. So we have our impact division trying to measure our contribution to the society. So we have more than 1,000 fish farmers being financed by our funders, more than 100 billion rupiah in total, and we have helped to create 13,000 new jobs from our loan facilities. And this is our partners. These partners are focusing mainly on the agriculture and aquaculture, in the circular economy, also on the small SMEs. Next stage, slide, sorry. This is just a little bit of a breakdown on our users. So when it comes to funder gender ratio, we have about 30% of women participating in our app, and still dominated by Java mostly. But interestingly, when it comes to the business scale, we've seen the SMEs is contributed mainly in Java, but then a lot of other places are actually coming from the micro or the fishermen, farmers, or the fish farmers around the regions in Indonesia. Next slide. Yeah, this is the Arkham Accelerator, a little bit of insight about the program. So we have about 4,300 Muslim entrepreneurs joining here, and we're pretty inclusive actually. So all entrepreneurs are welcome. We'll work with more than 10 government institutions, the ministries on conducting this program, and the solution that we offer is mainly like mentorship, business skills training, and also financing sports. Next slide. So this is a little bit of a snapshot from our demo day. So it's quite interesting. I think this is the food batch. So we have different industry verticals every batch. So this is the food now. We are doing the modest fashion batch right now. And yeah, we have close to 80% of total women participation in the 3 batches of our accelerator program. And among the top 50 that we select, we have 32 and now 46% of womenpreneurs in the top 50 that we select. Okay, next. So this is a little bit about the Islamic Institute. Obviously, we want to increase the literacy. As the literacy increase, what we see is that a lot of Indonesians still trapped in bogus investment scheme, right? And not few that they're actually educated, but obviously there are behavioral finance factors such as greed and opportunity cost and etc. So people actually got into the hole of this bogus investment scheme. So what we think is that with Islamic finance literacy, that there's an aspect that you shouldn't get into a highly speculative investment scheme. So not only that could contain your greed, the understanding about the structure, but also can help to contain the greed that make people go over the line. So we feel by increasing the Islamic finance literacy, it's also increasing the overall literacy about understanding on the financial market, and also help to preserve the wealth as one of the core value of Islam finance, which is the wealth preservation. So I'll end that and happy to receive any questions. Thank you.
Thank you so much, Pak Dima. So this is, mashallah, the achievement that Alami has been reaching out throughout the year. And so happy to see that Alami is actually a country-specific experience from Indonesia that transforming the value of inclusivity in Islamic finance for everyone. So basically it's not only for Muslim, right, Pak?
Yes.
But I'm a little bit curious regarding the womenpreneurs, Pak. So in your presentation, you mentioned that women can be both investor and also the borrower. Is there any gender-based incentive that Alami has been applying in selecting the investor and also the borrower from women's perspective?
Sure. Yeah, when it comes to the access to financing, we actually don't differentiate, right? So we're trying to be as objective as possible, looking at the creditworthiness of the business itself. But when we see a gender-based angle, like for example, the business is good, it's creditworthy, it's got a proof that we have the incentive to give when it comes to pricing. So the borrowers that implement the sustainability approach to their business, and where or they have a gender angle, right? So we try to come up with an incentive when it comes to the cost of fund to potentially compensate the other costs that they need to incur because they're trying to be responsible. So that's the area that we're working on.
Perfect, wonderful. Thank you so much, Pak Dima. We will be hearing more story from Alami later on. Just a little reminder to audience participant who are willing to ask a question, you can simply drop your question in the link, the Slido in the chat box. Now we're entering the Q&A session with speakers, Bapak and Ibu, Pak Artak, Bu Pak Dima, and also Ibu Agnes. And this is the question that we're trying to explore more from your presentation. The first is going to Pak Artak. Based on your exposure, Pak, to business and economic development projects in over 40 countries, is there any specific framework that can be implemented regardless the bureaucracy and technicality in each country, Pak, so that every Asia Pacific, especially country, can also adapt and also copy the mechanism?
Well, this is a good question, Gregat. Actually, what is happening in reality is that many of our innovative frameworks, we are first testing and piloting in Asia, because Asia has very good fertile soil for those type of initiatives. And Indonesia was amongst the major championing countries where we came up with those frameworks. One that we started that in Indonesia was Innovative Finance Lab, within which the Youth Collab was set up, Impact Venture Accelerators, and there are many other initiatives that are, again, first time happening in Indonesia, working with private equity funds, making more impact-oriented, etc. Some minor frameworks that are here and there from the other countries, we are bringing to Indonesia as well. So, for example, SDG investment maps, which have been already implemented in Indonesia. There is a shorter version of our accelerator program, such as we call it growth stage impact ventures, that helps us. So the meaning of that program is that we scout the ecosystem and try to find those impact oriented, or the ventures or the businesses that can be very sort of interesting from the perspective of contribution to sustainable development goals. So once we find them, we sort of celebrate it and we expose them to the investors without taking them to any sort of pre-acceleration or acceleration program. For example, that format allows us to do sort of like, let's call it a speed dating between the impact enterprises and the investors, facilitating financial access, etc. So that format we haven't yet implemented in Indonesia, but first time we tested it in Colombia, which is in Central America. So, for example, that one could be brought to Indonesia, but again, it will be within the framework of bigger programs such as Impact Venture Accelerator. So, but again, trying to summarize, I should say that most of the frameworks that we are testing, especially related to innovative finance or impact-oriented finance, it is originating, if not originating, at least piloting in Indonesia before taking it further. It relates also to green, sukuk bonds. It relates to the work with the funds, the accelerators. Now we are trying to work also on the concept of social impact bonds. Again, we've piloted in a couple of other countries. We start working in Indonesia 3-4 years ago. It didn't fly that time, but we are looking at relaunching that initiative here. Over to you. Okay.
Yeah, thank you so much, Pak Artak. So basically, the reason why I was asking this question, because we are in the sense of G20. So I believe that this cross-cutting knowledge can be shared in not only the G20 but also country around the world. This is perhaps having the needs to also adapt with the idea coming from Indonesia, like you mentioned, green suku, and then SDGs investor mapping. And just for your information, Pak Artak, so basically after the launch of the SDGs investor mapping in March or May this year. There are also my circle in Islamic Finance Network, which also interested to learn about Islamic investor, which is in the SDGs investor mapping. So I move to Bu Agnes, if you have any opinion, Bu, regarding this framework that can also be adapted. Since you mentioned Mexico, I remember you mentioned Africa as well, but specifically for women entrepreneurs. Over to you, Bu Agnes.
Thank you, Gregat. As I have mentioned earlier, actually there are various government programs that public-private institutions has initiated to develop this MSMEs ecosystem. And some of these programs are actually quite similar. Either it's mentoringships, capacity buildings, or trainings. But as we know, real fact that women are the major player in the MSMEs, we need to agree upon first that gender equality and women empowerment should be overarching themes across all programs. And talking about women needs and pain points, we need to understand that these are different than men's. Trainings conducted during morning times or afternoon when children coming from schools won't be accessible for this woman. It will be all men participants. I can guarantee that. So again, we need to really decide what works for women and start reworking on what doesn't work for women. Second, going back to the availability of the MSMEs data, it's quite scattered nowadays, and it hasn't been standardized yet. And I just learned that this needed to create some kind of holistic and integrated to build up some kind of one single source database, so that all related stakeholders can access that to create a more holistic and integrated capacity building and program for the MSMEs. I believe it's Ministry of Cooperative and MSMEs who hold the mandates, and I think they are working together with BPS and Bappenas, if I'm not mistaken. Yeah, but learning from our other experience in other country, when we talk about digital business particularly, there are three main factors to hinder women participations in the business. It's about digital literacy, whether women's smartphone ownership is there or not. It's about digital capability, which need further assistance from the e-commerce providers. Whether this woman who onboard on the e-commerce platform can interpret data trend and know risk. And then it's about financial literacy and inclusions, whether this woman knows or do not knows actually how to utilize business and invest money into productive assets. So in a way, when we want to create some kind of framework of program, designing tools and measuring it, we should understand about these aspects. Going back to women economic framework, this should be elaborate in every single phase when we start designing the program. For example, when we help one of the largest e-wallet providers in Pakistan, it called 𝙑𝙑, we design some personalized content to reach out their women customers. For example, we make it like, hi ma'am, hi miss, please introduce our e-wallet platform to women around you so that they can open this digital account, for example. And then you can click like 787 and send the invitations now. That's how we can nudge them a bit, attract their heart to be on board to the financial service and financial service products and services we want to. And then we give them some nudges to act. For example, we do blast message. For example, please put your leftover money in your account from this day to like 3 days ahead. And then this actually happens. This is what we actually do when we help Prospera, one of the G2P cash transfer program owners in Mexico. Yeah. And the last one is when we blast the message, ensure that that message actually comes in the right time. For example, if we want to engage retail sellers, we can do that blast when during the early month or the last month when we ensure that when we already ensure that the transactions are quite high in those periods. So this is something that we need to learn and understand, that it doesn't necessarily need that we have to have some exquisite program, a very grand design, but it turns out going back to the customers, looking their challenges, their pain points, what they are actually needs are necessary to build the overall framework of tools, framework, and also indicators to measure it.
Thank you, Bu Agnes. Since you mentioned about the gender equality and social inclusion, I underlined this GESI, GESI. I have a follow-up question regarding the stereotypes. We have stereotypes for women, also cultural barriers that hinder women in accessing some financial financing scheme or mechanism or institution. But before listening to your question, I really want to hear from the men's perspective first. So perhaps I would like to invite Pak Dima. Is there any approach to overcome these stereotype and cultural barriers that women has been facing over the time? Pak Dima, please.
I think, I believe when it comes to like helping the small business to grow, I guess before even the access to capital or the market, what is important is the access to mentors. So I think, and when it comes to women entrepreneurs, the best mentor would be a successful woman entrepreneurs, because it's really different, right? When you have a man entrepreneurs, they really appreciate the things that is specific. Like for example, when you have a baby, and interestingly, for example, during one of the ARCOM classes, a lot of the women, they obviously don't speak English well, and a lot of them is actually just listening because they can't look at the screen because they're cooking, right, for the kids and all of these things. So, Pak, please don't talk so fast. Don't speak like Jaksel. Just use Indonesian because I'm cooking or I'm like ironing things. Like okay. So, I think having like the mentors or the manager who built that sort of program coming from women, and our head of ARCOM is actually a woman, a successful woman entrepreneur. It is very helpful to first to inspire, to see that hey, actually there's a woman who wear hijab but can run like a successful startup and finally exit and all of these things, because there's still like some stigma, or maybe like there's not so many like success stories. So a lot of people or like a lot of women still cannot relate. Can I make a successful business if I have kids, or if I'm a wife, or if I can't speak English well? Can I pitch to investors? If for example, we have one case, if I wear like long hijab, can I pitch to investor? Whether they, like all of these things, but they don't share it, right? They just keep it to themselves and talk to their friends. So I think as the institutions that provide this sort of training or program, we need to be proactively and talk to them, understand them, so they can be more open and tell their deepest, I would say, concern about things. Because most of the time it's not because they're not bright enough. It's just sometimes they have a mental block. They have a belief that they cannot do it, so they will not. They have a successful business. They're not confident to scale it, because what if I cannot get an access to capital? What if I get tricked? All of these things. So yeah, I think that's like one way to try to break that stigma.
Thank you, Pak Dima. I think this is aligned with the tagline that empowered women empower others, right? Empowered women empower others. So let's hear from Ibu Agnes how to overcome these stereotypes and cultural barriers too. And then we go to Pak Atak as well.
Thank you, Gregat. When we talk about financing, we talk about two types of business here. Those who already have the privilege, those who already own big and stable business and capital to have access to finance. And they are the second one, who are the one who still lack of financial access. So I want to focus on the second type, where most women MSMEs still categorized under this layer. Before developing their business, we will first see that most of the financing goes to smooth their consumptions. If there was a month when they're facing emergency or in difficult times, they often face options with predatory financing where they encounter hidden fee or very high interest rate. And from the women perspective, we know that, for example, during pandemic, women are being affected disproportionately due to additional domestic costs. Their spouse are at home and some are being laid off. Their children are going schools from home, and they also need to carrying burden to earn additional incomes. Several gender norms that can constrain these women, and it really happens globally. For example, women and girls have this kind of stereotype that Mas Dima has mentioned. They should prioritize caregiver, and globally, women do 75% of unpaid care work, leaving little time for them to generating income. Another gender stereotype, for example, women may not have privacy, particularly on the financial, from their business, from their husband. Hence, they are not able to save or have control over financial resources. Or in several countries where women should not own large assets. And do you know that 75 countries actually limit women's property rights so that loans that require physical collateral are often inaccessible for them? And last one is about smartphone ownerships. Globally, women have less access to mobile phone. So just having that made available for them really isn't the full solutions. This MSMEs, entrepreneurs, particularly women, obviously need a convenient and affordable ways as well as safe place to start building up their savings, being confident to be able to conduct the transactions. But they also need business and asset protection so that they can manage risk and protect all that they have built actually.
Thank you so much, Bu Agnes, for the extensive explanation, especially on the equal access. I underline this tagline. So we move to Pak Artax. We know that UN has been, JSC is our blood. So perhaps you have another perspective on this, Pak.
Yeah, well, see, let me put it first of all, comparison between those two clusters that we are talking about, youth and women, right? So there's one major difference between their entrepreneurial approaches is that we do see, and not surprisingly, youth is being more open to new opportunities. It's a bit more like a risk taker, as opposed to, let's say, women entrepreneurs, which are much more considerate, sort of much careful in taking different paths or coming up with sort of a new ways of managing their business. Not necessarily innovation, because we see that innovation is something that both women and youth are pretty good at sort of targeting. It's just the business approaches and operating the business might be a bit different on both cases. Well, I want to also underline from our experience that especially when we talk about women entrepreneurship, it varies. It really depends on the culture, and within the same region, we might have very different picture, how women is positioned vis-a-vis the businesses. But the one thing that surprises us is that even in those cultures where I would say women's rights are somehow subdued because of these sort of laws related to collateral, etc., etc., still we do see maybe implicit but quite sort of visible to us once we go deeper into that it seems that women are better entrepreneurs than men and better sort of managers from operating small business perspective, so even if in those cultures where it has to be somehow hidden, not made evident, etc., we've seen that aspect, and that was sort of that's a phenomena that we've seen across all the countries. That's a really an interesting aspect. Now there is another interesting place here. There is a dilemma whether to start your own business or to continue with your career if you are educated and if you do have a job. Here as well, we do see different points, right? Sort of women are more reluctant to sort of surrender their job and switch to entrepreneurial type of activities. So even if we do that, we try to combine it for some time before we sort of entirely shift to fully full-time operated enterprise. Then those that could be sort of categorized more like a youth versus the women. So the youth is much more willing to try and test and even leave their new jobs, trying to do something something more interesting and maybe sort of more impactful from their perspective. That's another difference that we see. And another point that I want to underline is, when we speak about the different aspects or different environment where women are operating, it's especially from the perspective of designing the programs that would sort of target empowerment of women. There are many things that needs to be considered. It's access to education for the children of those women, right? Access to healthcare, etc. But one important thing is also timing, and I actually was sort of very glad that it was mentioned by the speaker that sort of timing of such a training programs, or any events, etc., really does matter. You have to factor it in order timing within a day, because we do see that the schedule of let's say a typical woman and someone with family, etc., is quite different from the schedule, daily sort of schedule of a typical man, and really those things needs to be taken into account. There are some other aspects when we go and look at let's say urban population versus rural population, where its own specificities comes into play, etc. But I'll stop here, otherwise we can elaborate a lot of those matters.
Yeah, I got your point. So this is quite ridiculous, because we see that actually women are better entrepreneurs compared to men, but they are faced with always by choice. They have to choose whether A or B, C or D, and so on and so forth. Okay, let's discuss with participants. We now open the Q&A session with the audience. Yeah, we can check the Slido has been sharing by the committee and the organizers. The first one is directed to Pak Dima. Does Alami prescribe any asset for collateral from the P2P and MSMEs borrowers, and what is the strategy to get NPL 0%?
Yeah.
Thank you, Pak Dima.
Thank you for the question. We don't have we don't ask for collateral for the SMEs. We are providing unsecured financing. So as long as for invoice financing, if you have a legitimate invoice, and for purchase order, the legitimate purchase order, or for working capital, you are within our partners ecosystem, that we can provide you financing if you pass our criteria. And the strategy to keep the NPL 0%, first is I would say the credit risk mentality since day one, because a lot of startups, they just grow at the expense of everything. So for us, from day one, we want to target sustainable growth, grow as fast as we can while still being responsible to the credit quality. And second, we are targeting defensive industry, right? So during the pandemic, for example, we are going into healthcare, we're going into logistics, and several other industries that's actually growing during the pandemic. So I think these two, and just like being disciplined, everything is trackable to reduce human error, to reduce potential, potential fraud, and etc. So yeah, I think that's the answer from me, Mas Greget.
Yeah, thank you so much, Pak Dima. I think it answers the question. If not, Alami can be reached out through social media in any platform. Please go back to the Slido organizing committee. All right. Okay, we have a question for Pak Artak and Ibu Agnes. What are the innovation tools, methods, ideal financing model exists in financing youth and women MSMEs, a successful experience. I think it already explained in the slide, but I think Bu Agnes and also Pak Artak can explain again briefly. Please, Bu Agnes and Pak Artak.
Okay.
Well, ladies first.
Not because of gender,
I'm sorry, Pak Artak.
Well, talking about ideality, there are no one size fits all model. Each products and tool should be customized to what the customers need and factoring in their challenges and points, as what Pak Artak has mentioned. On the other hand, all MSMEs entrepreneurs wish to grow their business, right? It means that in every single phase of their business cycle, there should be a phase when their business are shrinking or growing, or they expanding their customer base or something else. It means that for those financial service providers also need to enhance their capability, enhance their knowledge on who are their customers, what are their needs for now. We cannot do one-time portrait and then just build up a product that's suitable for all. We cannot do that. Instead, customer journey, product development is also necessary to build a more suitable and inclusive product and design to help them grow as well. That's my answer.
Right, so it's tailor-made. So Pak Artak, over to you.
Yeah, let me elaborate on that. So first of all, one thing that absolutely we need to come up with financial products or schemes or methods which are relevant to this or that enterprise. And from our experience, there are actually two types of MSMEs, right? The ones which are, and maybe again, those factors really depend on the ambition of the entrepreneur, on the economic environment in that particular subsector of the economy. But there are two types of them. One is the type of ventures which are really very positively aggressive in terms of their growth ambition. These are the guys who are like, they want to go to the accelerators when speaking with, I don't know, venture capital guys, these type of investors, etc. And their growth is like, okay, it has to be 100%, 200%, 300% within a year. So this is their sort of level. And the type of financial products and approaches that we would suggest to them is quite different from those that we would suggest to another type of MSMEs, where, okay, those are also want to grow, but the growth might be somewhere between 5 to 20% annually, right? Sort of a moderately, gradually growing sort of type of business. Now, those guys require quite different tools and products. So, I mean, those guys won't be able to speak with any of the, I don't know, private equity or VC guys, and accelerators are not interested in them. But those guys could be supported through a typical MSME support project, right? Now, an innovative aspect here, and this is what we usually refer as innovative, is when we are infusing the concept of impact into the financial product. So depending on the impact that this activity would be financed, the cost of the financial product would change. The higher the impact, the lower is the cost. So we have come up with such sort of approaches with a couple of financial institutions, and that does work. Not only UNDP, but there are many other international development players, international financial institutions, which do have that sort of interesting concept. The higher the impact, the lower the cost of financing. Now, there are other things that we have been experimenting. These are so-called loans with profit participation. Is that when the cost of funding grows once the profit grows, and cost of funding goes down if profit goes down. So it's a loan but behaves like an equity. So that's another interesting product which is available to support MSMEs. And there are several others like that that we can talk about, but we continuously experimenting, trying to see which one makes sense in which particular environment for what type of enterprises. So, thanks.
Thank you so much, Pak Atar. I think if we talk about the mechanism or the scheme of financing, it can be many, including the marriage of social and commercial instrument, especially for Islamic finance. I believe that Pak Dima also familiar with that. So let's go back on the slide though. Pak Risnanda, is there any specific difference in financing product between men and women in empowering MSMEs? I think this question quite related to Pak Dima perhaps, because it's asking about example, right? Product. So Pak Dima, offer to you.
Sure. I think to the best of my knowledge, a lot of products are similar when it comes to the financial products. I guess the one that could have a differentiation is really depends on the operator. So for example, for us going forward, we plan to have a better price for gender lens borrowers or impact related borrowers, either in the industry or within the business practice themselves. And there are certain business models where they are focusing on women in rural areas, like Grameen style. So I think that is also has its own reason on doing so, because I think based on their studies, women has better repayment rate than men, especially when it comes to socially gathered finance and in rural areas. So these are the kind of like more specific products that target to women in rural areas, for example. But other than that, from my limited observation, I think there are no like specific differentiation in many financial institutions when it comes to products.
Thank you, Pak Dima. Let's check again on the Slido. This one is for Ibu Agnes. Please explore more about internal funding for all three types of womenpreneurs. Is there a big family or parents-in-law, husband, etc. for funding? Ibu Agnes, time is yours.
Yes, right. So again, it's about different behaviors when women and men access and use loan, right? So during our previous research with the ultra micro entrepreneurs, we found some differences in their previous sources. For example, women are more likely than men to borrow money either from their families or from a group lending format or cooperatives, while men are seems to be more confident to borrow some money from their friends or their social networks other than their families, and as well as having the confidence as well as capability to borrow some money from formal financial institutions. It makes sense because going back to the gender norms, most of this, we talk about micro segments and ultra micro segments, yeah. Most of this ultra micro segments tend to have less assets under their own names. This is talking about women. So again, when they try to borrow money from formal financial institutions, they won't be able to access it because, for example, if they have motorcycles, the STNK would be under their spouse's name. If they have houses, even though it's smaller size, or they have land or property, most of them claims that it's under their spouse's name. So again, funding accessibility for women, it's quite challenging. And thus, when it comes to internal fundings, again, women will have less limited options for them to access. Either it's their parents, their sisters, or their in-laws. These are the typical ways when women access loan compared to men. But again, we all understand that gender norms is there, whether we like it or not. But the homework for us is not about changing the gender norms, but it's about how we work around that, how we can build a good product that can elaborate this woman-centric design so that women could have a better access, better knowledge, as well as better usage in doing financial transactions.
Thank you so much, Bu Agnes. Let me take this opportunity to also promote the product from our government. So basically, the Ministry of Finance through Pusat Investasi Pemerintah, or Government Investment Center, also create and issue mechanism of ultra microfinancing. I think Bu Agnes mentioned it in the beginning about ultra micro, or UMI, ultra micro financing. So the credit limit is very low, and that's also targeting women, and also allow Islamic financial institution to also channeling this credit, like Islamic cooperation. So I think this answer two kinds of obstacle, women and also the inclusion of Islamic finance. So that's a very good idea, and congratulations also to the Ministry of Finance. So go back on the slide 2, please, committee. Yeah, we have one left questions to Pak Dima. Very proud of Alami. Based on your data, what are the parameters did you use to measure impact venture accelerators? Basically, the impact venture accelerator, actually, I think it's UNDPs. But yeah, so Pak Dima, over to you.
Okay. Yeah, I think I'm just gonna take it from a more macro perspective on Alami as a group. First, on the various SDGs that we have. We're focusing on 4 primarily. First is the goal number 1, no poverty, and that is from our community development program, our social finance initiatives, as well as our tech. Goals number 4, quality education. We have the AMI Institute, ARCOM, that works together with universities to help to increase the literacy and the quality of their education. Goals number 8, decent job and economic growth. This is covered under the SME financing. And lastly, goals number 10, reduce inequality. So this is where our social finance initiatives comes into play. So, with regards to the ARCOM accelerator, the one that we define as impact focus would be, we would like to keep it generic for now, because the discipline itself, the understanding about sustainability, it's still like evolving. There are different standards and everything, so we'd like to keep it generic, looking at what industry that the business is operating in. So for example, the one tech-enabled waste management, for example, so we're looking at it as an impact because they're focusing on helping the scavengers, the pemulung, to have a better livelihood using the technology, for example, and the tech-enabled sign language provider for the deaf communities. So things like that, or obviously the electric vehicle that is like helping from the carbon side, right? So these type of like startups under ARCOM are the ones that we are focusing on, and we put, I would say, like more preference towards, because I guess the impact is wider for the community as a whole. I hope that answered the question. Thank you.
Thank you, Pak Dima. I agree with Pak Dima's opinion to make it generic because we have so many methodology and indicators to be adjusted. But since it's mentioned about impact venture accelerators, I think Pak Artak, if you would like to add on something.
Yes, I mean, the impact measurement is a complex matter. It's not simple. But we're like 2 ways of, whenever I'm asked, how you do that and what are the parameters, there is a simple way of doing it, right? One is, if you want to measure the impact and look at the impact, first consider the number of beneficiaries behind this or that activity. And when second, consider the value that your activity is provided or generating for those beneficiaries. So one multiplied by the other, like I'm oversimplifying naturally, but that what the impact is all about, the beneficiaries and what impact those beneficiaries are getting, right? Now, on a practical side, again, besides the SDGs, we actually look at something called IRIS Plus, Impact Reporting Investment Standards, IRIS Plus, because it is also reconciled with Sustainable Development Goals and all those other indicators under the SDGs as well. So IRIS has over 700 different indicators. Why so many? Because each field requires its own indicators. Like the impact for, let's say, sustainable agriculture would be very different from the impact in the field of education or impact in the field of healthcare. And those IRIS Plus standards, they offer, they suggest parameters that you can use, but they are not restrictive. They are saying that, okay, this is suggested ones, but you can add specific ones for your particular business. Another layer of complication comes when we look at the impact because from the holistic perspective, one of the approaches that we try to sort of advocate and implant in the measurement and management methodologies of our startups or enterprises or even corporates is neither to look at one particular impact, particular SDGs, let's say poverty or women empowerment number 5, etc. Right? All those impacts are interrelated and interconnected. The moment you focus on just one aspect of that, that's a recipe of creating problems in future. And usually I bring such examples as, seemingly, very positive cases of, let's say, financial access. We have the case of microfinance, which is addressing financial access, but we have also the cases when financial access is addressed through microfinance settings, which brings to bankruptcy of a lot of enterprises, a lot of villages, etc. So, let's say affordable housing, an interesting impact to target, but if you do only affordable housing and you forget about all the other things, when usually those affordable housing projects become ghettos, and we have seen that even happening in developed countries, right, where all those projects ultimately convert into some sort of really not pleasant places to be. Or another example, 30 years ago, sorry, when PET bottles, plastic bottles came into play, they considered that very impactful solution because it requires much lower carbon footprint, transportation cost, as opposed to glass bottles, much less. So apparently there is sort of a very nice impact. But 30 years later, plastic or PET bottles becomes a major pollutant, plastic pollutant. And again, this is just one of those examples when if we consider looking at only one aspect of the impact and forget about the others and those connectivity, interdependencies between those, that might create an issue. So that's something to look at when measuring impact. And the impact is quite a complex matter. We, as UNDP, we came up with so-called SDG level at the private equity level, all are to understand how to apply that impact measurement and management methodology. Over to you.
Hello, yeah, I do apologize for the technical error happening just now. So, and also unfortunately, we reaching out the end of the discussion. Thank you very much, especially Pak Artak, also Ibu Agnes and Pak Dima for the extensive presentation. Also for the jargon, I found 3 interesting jargon that women are better entrepreneurs, women also better investors, and women own more business than men actually. But there is also a tagline for millennials that basically when millennials talk about money, talk about every rupiah, every dollar that they invest, they really mean it to be able to give impact, especially as for instance, gender equality, and then inclusion, and then environmental benefit, and so on and so forth. And let me also closing this session by giving you a summary of our talk and discussion this afternoon. Number one is to foster the role of MSMEs. It requires enabling ecosystem, and it includes promoting access for youth and women, and then to also demonstrate the digital literacy, financial literacy, data management, policy enhancement, and also needs to engage with civil society. Number two, MSMEs also possess substantial leverage for the value chain greater than material benefits. And this is related to Islamic finance value, especially, including ethics, morality, and spirituality, with economic independence as the ultimate goal. And it will be also very useful if it can be measured using impact measurement, which is interconnected and interrelated. And the last one, the development of MSMEs through a tailor-made financing modality is the door opener for an equal job opportunity that affects the real income growth per capita, especially for the country. And it consequently results in the attainment of the GDP target. So once again, I would like to be thanking to Pak Artak, Ibu Agnes, and also Pak Dima. And I stop here. Thank you so much for those who have been joining since the beginning of the event. And let me close by once again thanking the Ministry of Finance and also development partners for the fruitful discussion and excellent event. See you at the 7th Annual Islamic Finance Conference next year, insyaAllah. I'm Berikut Kalabuana. Terima kasih. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Greget Kalabuana and all the panelists. We believe it has been a productive evening or afternoon or morning for those of you joining us from the other part of the world with enlightening insights during the panel discussion today.
And we have now arrived at the closing session for our event. But before we wrap up, I would like to invite Bapak Suminto, Assistant to the Minister of Finance for Financial Services and Capital Market, to deliver the closing remarks.
Ladies and gentlemen, please join us in to welcome Bapak Suminto.
Terima kasih. Assalamualaikum warahmatullahi wabarakatuh. Selamat siang, salam sejahtera untuk semuanya. Distinguished speakers, panelists, moderators, participants, ladies and gentlemen. Let me begin my closing remarks by reminding us to always be thankful to Allah Subhanahu wa Ta'ala, God Almighty, for all of His blessings. On behalf of the Ministry of Finance of the Republic of Indonesia, I would like to convey my appreciations to speakers, panelists, moderators, and participants for their invaluable contributions to this productive event. On the last 2 days, we have been collaborating and exchanging ideas, views, knowledge, and experiences regarding Islamic finance role in the empowerment of micro, small, and medium enterprises. Through the conference papers submitted, we have matched interesting, critical, and constructive ideas, which will hopefully contribute to the development of the Islamic finance and MSMEs empowerment. Through this conference, we have also reiterated that Islamic values and principles of justice and equity embedded in the Islamic finance are aligned with the essence of the MSMEs empowerment and high growth potential. In practical, the values and principles of Islamic finance supported with fintech and digitalizations, has the potential to create a better environment for sharing investment and financing for MSMEs, while making it easier to be institutionalized. This conference has exhibited the potential key role of the Islamic finance in economic empowerment, where Islamic finance is expected to play significant roles in our economy for the near future and beyond through a just and equitable participation among its stakeholders. Distinguished colleague, as we all know, MSMEs has played and will continue to play a crucial role in our economy as one of the important drivers of our growth. Thus, ensuring MSMEs sustainability is a central issue in our economic development, especially during this challenging and volatile time. This conference has succeeded in extracting knowledge and framing MSMEs development policies, as well as elaborating Islamic finance role and potential in the development of MSMEs. It has also produced wonderful references, common grounds, and strong advice for policymakers in developing MSMEs, especially supported by Islamic finance. Distinguished colleague, financing is one of the critical aspects in maintaining MSMEs' stability and growth, where challenges facing financing varies from limited access of finance, high cost of transactions, collateral issues, asymmetric information, to limited access to market and business network. Therefore, it is critical for us to be able to effectively integrate financing framework with MSMEs development. In this respect, we have revisited various ideas and frameworks of MSMEs development and re-emphasized the need of fast and sufficient data in order to accurately portray the landscape of an economy MSMEs. This includes assessing and structuring institutions and entities in MSMEs ecosystem to be classified, rated, and then provided with integrated financing scheme, equipped with capacity building and monitoring and evaluation. In addition, the impact of Islamic finance should also be measured and monitored. From the conference, we have identified a number of achievements, opportunities, and challenges in empowering MSMEs. In this digital era, where market increasingly become borderless and supply chains can be integrated seamlessly, Islamic finance, with the support of digital technology, can fairly accommodate MSMEs expansion beyond borders through the adoption of e-commerce and e-financing. This will further boost MSMEs' opportunities and capacities in cross-border activities, making them more attractive to invest. Other than supporting cross-border market expansion, the adoption of fintech can help strengthen inclusions for both smallholder businesses and consumers. In addition to this, strengthening the value chains by establishing a strong linkage between Islamic finance services providers and Islamic social fund like zakah and bawah and institutions, supported with fast and secure link of halal value chains through technology and digitalization, is also paramount to be developed. Although it is well known that Islamic finance is quite resilient, supported by the principle of justice, applied and reflected in loss profit or risk sharing instrument. This characteristic alone is not sufficient. Further advancements through innovations and digitalizations must be encouraged in order to integrate Islamic finance, either commercial or social, with the real sector, promoting trade and investment, engaging in value chains, and strengthening business partners in support of long-term stability and sustainability, inclusivity, and fairness. Development trades that has become increasingly important, especially in this time of recovery and in the middle of uncertainty, is important to be addressed. Thus, the potential utilization of Islamic financial tools, especially equity financing for MSMEs employment through technology and digitalization, should be well advocated and implemented, as those tools and technology framework play important role in developing and amplifying Islamic finance role in empowering SMEs. Last but not least, still in the context of SMEs empowerment, we also emphasize the important participation of youth and women, as their role in the economy has increasing grown. To this end, a holistic framework of youth and women SMEs empowerment through Islamic financing, equipped with business capacity development through accelerator program and providing market access and network, can produce a tremendous result for the economic growth. Ladies and gentlemen, to wrap up, I would like to recommend a number of key points of concerns that may be worth discussing and considering in respect to the vital role of Islamic finance in empowering SMEs. First, building a robust development framework equipped and supported with clear mandate is very much critical. This robust framework should be supported by a comprehensive policy toolkits and guidance, commitment from all stakeholders, and sufficient data for MSMEs development. Second, the availability of regulatory supports, incentive, and good positioning for Islamic finance institutions and funds involved in empowering MSMEs are critical. These efforts should be done simultaneously along with, first, enhancing Islamic finance inclusivity and literacy. Second, leveraging Islamic fintech and digital platforms to its fullest, and establishing Islamic capital market for MSMEs to reduce asymmetric information, lower transaction cost, and amplify risk-sharing values. And finally, integrating with Islamic social finance. Then, third, promoting youth and women-led MSMEs as part of MSMEs empowerment and implementing effective platform, data collection, and management. These efforts will have strong impact, especially in enhancing inclusiveness. Effective data collection and management will lead to better outcomes and better decisions and policies for all parties, both client and financial institutions. Further down to the road, it will help strengthen business, upgrade, and increase value of assets, which in turn will help improve access to finance for youth and women MSMEs. Lastly, in support of its development, it is necessary to create a clear and formal pathway for MSMEs growth, enabling accurate and effective policies and treatment for every level of SMEs development from all stakeholders, including monitoring mechanism. I'm confident that our efforts in the sixth conference of the Islamic finance conducted by the Ministry of Finance of the Republic of Indonesia has facilitated a very constructive exchange of view and knowledge, as well as bringing new insight for all of us. I would like to congratulate all the winners of the call for paper during this conference. May your work and accomplishment benefit you and a lot of people in our community. Finally, I hope valuable knowledge and insights produced in this conference will find its ways to a vast number of critical stakeholders and become an invaluable building blocks of policies for SMEs empowerment in the future in Indonesia and other Islamic countries, and broadly all countries in the world. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Suminto, for your encouraging message.
Ladies and gentlemen, now we come to the end of the whole agenda of the 6th Annual Islamic Finance Conference. After 2 days full of excitement, insights and experiences, we would like to say thank you for your greatest participation.
And also, your opinions on this conference are greatly appreciated, as it will assist our organizing committee in shaping future events. Please share your talks in the link that will be available on the screen right now, and participants who complete the feedback form will be eligible for a certificate of attendance. All conference materials are available for download at the same link.
Thank you to the Assistant to the Minister of Finance for Financial Services and Capital Market, Mr. Suminto,
Ms. Isfari Sivalingam,
Mr. Said Farouk,
Mr. Syed Hasan Al-Shagov,
Mr. Umar Munshi,
Dr. Ginanjar Dewandaru,
Mr. Artak Robert Melkonyan,
Ms. Agnes Salianti,
Mr. Dima Jani,
Mr. Gregat Kalabuana,
and Dr. Ivan Shauki.
Thank you to the organizer of this conference, the Ministry of Finance of the Republic of Indonesia, in cooperation with the Islamic Development Bank Group, Bank of Indonesia, the Global Partnership for Financial Inclusion, and its counterparts, Better Than Cash Alliance, Women's World Banking,
United Nations Development Program, the National Islamic Economic and Finance Committee, and the Indonesian Association of Islamic Economists. And this conference is also supported by the Faculty of Economics and Business of Bogor Agricultural University.
We apologize for any mistakes and inconvenience in presenting this conference. Thank you for your attention, and see you at the 7th Annual Islamic Finance Conference.
Wassalamualaikum warahmatullahi wabarakatuh.